Oh boy. See this handmade bowl? Hey, it's a Meatball. He's back from the vet. How's it going, man? Let's give Meatball some treats in the morning. My name is Andrew. How's it going? Hope you guys are having a nice day. I mean, most of your days are just getting started like mine. It is about 6 a.m. over here, and I'm super happy to be here with you guys talking about the stonks that we need to talk about today, right? This is a channel where we talk about how to do technical analyses as well as the news you need to make sure that the stocks that you care about are being taken care of. Watched. Who watches the market? We do. If you guys enjoyed that congressman interview yesterday, I know it's just a little bit of a special treat for all of us, especially me. That was my congressman, and we are here back again to talk about the DD, talk about the stocks, and I hope you guys are excited to join us this morning. How's it going, everybody? Going on in the live chat. Let's see who is in there in just a second. But as a quick reminder, let me just check my audio real quick. Everybody going on in the live chat. Let's see who is in there. Sounds okay. Sounds like the audio is good. All right. So as people start to file in, we have the synopsis for what we need to learn this morning. We also have the DTCC making moves. DTCC formed to confirm possession of shares. Okay, so that's going to be a brand new update that we do have to pay attention to. These are all updates on the new GME subreddit R super stonk, and we are likely going to see some more R super stonk updates here from the OG. We also have WallStreetBets here, basically never talking about GME or AMC anymore, which is, you know, fair enough. That's why so many people have already gotten off of the very original WallStreetBets, and then the old-ish RGME, and it's starting to look a lot more like memes are starting to blow up, and a lot fewer upvotes overall in general. So let's see. It looks like this is from a different mod, so we do need both sides of the story. So this is something that we could look at. Let's see now. And then this, the ape strategy. Okay, so we have a good amount of, we don't actually have a lot of DD over on RGME anymore, which is good because now we are on our super stonk. And we do have Rensol's synopsis for the day, which we are going to have to cover in just a second. For those of you that missed me yesterday, I was bringing Meatball to the vet. He just had a fine needle aspirant to do a cytology on whatever's growing on his back, and it would be a load off of my back if it would get off of his. But worried parent of a poor sick corgo. Just my anxiety talking. Anybody else? How is everybody doing right now? We have Jason of Wales. We have Oscar Benson. Let's see. Oh, people are saying turn my mic up. Here. Does that work? Is that better? Is that better? Boom. Let's see. Cracker Stacks. Vato. Emily P. Dylan. Just Jess. Semper Monkey. Jason Wolf. Caution to the Wind. Stovetop. Gamer Dude Epic Z. Zenaku Good and Evil. MHHC Senior. Ooh, Kakov Films. What's going on? Joseph M. Cowabunga. A Cowabunga. Very cool. Let's look at that option chain yesterday to give a good understanding of what to expect today. So from the 6th, okay. So this is from yesterday. We had these small, relatively small-ish put walls over here, about $4 million. Oh, sorry, wait. Yeah, about $4 million at 330 and 340. So these are deep in the money puts. Somebody is trying to be able to sell the price of GameStop at 330, 340, as well as at 250. GameStop has not been at those levels for a good amount of time. And so that begs the question, what are these puts? What are those? What are these puts doing here? We also have some regular puts that are not in the money. These are out of the money puts at less than $1 million. $1.5 million all put together between $30 and $50. And that's something that is a little bit more akin to normal activity, right? Some semblance of a gamma ramp downward here, But as of right now, we need to figure out this mystery. What is going on with these puts? We have DD been scraping data about hedge funds for over a year now. Let's actually finish the synopsis for the day, because we do have a whole 19 minutes until the day actually starts. So that's exciting. Let's see. Hello from South Korea. How's it going, Geist? Hello from Gideon Soares. Let's see. Yo's is Derek Martinez. So, as we try to get more people in here, the question is, what is happening with the algorithm is the actual biggest question. What is going on with that YouTube algorithm? That's the question that I've was on a chat with a YouTube representative, just trying to understand a little bit more about what the heck is happening. Okay. Oh, X-Man, no problem. So, good morning, Santiago. I am Renzel. Everyone is subscribed to Kenny G's OnlyFans. Insert flashy intro card. Bloomberg terminals. First of all, thank you for user short a squeeze go burr for amazing right up here. Let's see if I'm allowed to show this Bloomberg terminals. I think it's important enough that everyone should take a look at it. Why? Because the more knowledge one has prepared, the more prepared one is, the better we can all use a version of the Bloomberg terminal on a daily basis. The only difference is that we have a shiny, sleek 1982 version, and we use a bootstrap version across several different websites. For example, blah, blah, blah. Those sites give us the same sort of information, but the difference is simple. We don't know how to read, so once you learn how to, it's easy to discern how much volume has gone through, what those weird percent things are, and so on and so on. We advise checking it out and trying to make a wrinkle. Deep in the money calls. First, thank you to this user, Dan Bren, for posting it up here. Since the beginning, we have the Citadel and other parties hide their FTD deep in the money calls. But yesterday, that seems to have changed, as seen here. Okay. Whoa. Hedgies did not buy deep in the money calls for the first time. Yeah, I remember seeing this headline. So let's take a look at what this is actually saying. Oh, this is the same. Dan Bren. The thing is, the DTCC passed a new rule yesterday to be effective immediately. Let's see, this means that the 005 ruling stands until recalled or amended. So the time stone, what we've explained before in the past, that the Thanos snap, right, requires all the infinity stones, and the time stone is the one that stands for the cyclicality FTDs to finally be stopped. So we actually have a leg up now. They cannot hide their FTDs anymore. That was their like weapon of choice. That was a weapon of choice. So that is going to be so just going through the updates while the market's not open yet. Then we'll do a little bit of technical analysis of what happened over the pre-market. It could be that the 005 has nothing to do with it, but we would need to investigate how and what it does. Also, if it was not the case, what was? This is also due to the fact that we barely broke 6 million in volume yesterday, which is low. Yeah, that's one of the lowest GME has been in the past few weeks, actually. Also, the new rulings of the DTCC could in theory, have nothing to do with GME specifically, but they are certainly worth looking at. So we're going to cover DTC rules in a second. 005 does seem to be in effect. So that is 100% the second to last piece of Exodia that we've been waiting for. When Ken Griffin is no longer to short stocks, Kenny G has never seen such BS before. The art of war. Okay, so let's see. What does this mean? Even though our subs seem to be divided, they are not. Apes just have an extra tree to call home in case some trees get cut down. We are still one big community, and we all still have the same goals. No infighting, no attacking other subs. Let's move forward and be one happy ape family. So normally when the price goes up, you buy in. Houston Wade is talking about the art of war. When it goes down, people panic sell, but these guys just go, okay, and they buy up those shares, and those hedge funds don't have any tactic against this because it's not normal market behavior, which is excellent. This is the point, right? There's bulls, there's bears, but now, brand new invention, 21st century, we have apes. This is the definition of insanity. When your opponent is so crazy that no matter what they do, that no normal one would do it, demoralizes the other side. For example, in the Middle Ages, there was a tactic of sending the dead soldiers back over the wall to demoralize the castle. Now, normally people would panic and the winning side would just wait them out. Now, imagine if they did that, but the castle side did not get demoralized. They would dress them up or treat them like passed out drunk buddies. The attacking side would, nah, these guys are crazy. I'm not going inside there. That's the psychology of it, the art of war. Apes waiting on the shareholder meeting announcement. Ugh. Why is the borrow rate so low? So we've talked about that disconnect. We've very much talked about that disconnect of why the borrow rate is so low while the available rate is so high. Just in that chart alone, it was in a logarithmic scale y-axis, and there was basically no explanation. It was like TCAT with its availability with over, I don't know, quadruple digits or like a ridiculous amount of borrow rate, and then with our friend over here, GME, having almost the exact same availability but having like less than 1%. Last year, the interest price was high for borrowable shares between 15 and 22 at its lowest. That means that good, decent money was to be made lending them out. But this year, it's different. BlackRock has been backing RC since the start of Chewy. So they want to have our boys back when the shareholder meeting comes around. Because, well, either chairman of the board, which is higher than CEO, or CEO positions might be grabs this year. Last year, around this time, Citadel was right. GME was a dying company, which was prolonging the inevitable. But since RC stepped in, the entire script has flipped and now switched from a losing battle to an underdog story. Okay, cool. I don't think I can show you this next part. Hold on. Ooh. We had Austin come up all of yesterday. So if you guys haven't seen that, that is like 4 hours, basically 4 hours straight of me and Austin chatting about rehypothecation, about walking like a duck, talking like a duck, right? About the hyperinflation, about the risk to the global economy. Honestly, it's huge. This is one of the biggest things that we have to talk about here, is that there are a lot of different tactics. But now those tactics are running out of time, and now that we have those bullet points that we need to send Ro Khanna, that's going to be the very beginning. Like, we had a congressman say he wants to see our DD, he wants to get bullet points up, and we actually are having his a member of his office, Mason, the one that introduced us, join us later today during Power Hour to be able to help us figure out exactly what those 6 bullet points actually look like. Let's see. Boop, 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 boop. Charlton Breezy, peace. Let's see now. If you guys want to pass me that DD mods, let me know. Okay, the team is always here. So Austin's write-up, we haven't actually checked it out. Walks like a duck. Let's see. Be excellent to each other, backups. My sweet summer chimp was meant to reference new apes, not a specific user. Okay, so we are here with our, well, first super, Robert Becker. Let's go back to giving Meatball some treats for the supers. April 8th SEC meeting is to discuss injunctive actions, administrative proceedings, res of litigation claims, other matters of examinations and enforcement. April 8th. Coming in to see if the SEC will actually do something. Okay, so now that we have a clear understanding of what is going on here, let us go back to the charts. And that's the reason, right? We have talked about, let me talk about that narrative again of exactly what is happening here with this AMC huge dip Friday morning, complete resurgence midday on Monday, and then seemingly overcorrection and sluggish movement yesterday. This kind of story is the narrative that I wanted to build for a long time, which is, hey, panic selling, stop it. It's based on bad data. Currently, the data that you are playing around with is that sometimes there's bearish news, sometimes there's bullish news, right? But that makes you act like a bull or a bear, not like an ape. If you're looking at the news of AMC trying to have the option of issuing 500 million shares, this is what happens. The CEO shows up, CNBC has the opportunity to put like a huge text crawl underneath them that says, CNBC confirms that AMC CEO wants to issue 500 million shares, right? He did not say that during the interview. However, CNBC has it underneath his head the entire time, tumbles the stock because of possible dilution. People over the weekend realize what that actually means, sees a beautiful week where AMC's box office for the Kong Godzilla movie actually breaks the box office records for the previous Kong movie or Godzilla movie, which is crazy because that one was back in 2019, way before the pandemic even started. So huge growth and having the analysts boost the AMC from hold to buy. I've upgraded it to be able to push brand new heights. So this is essentially what you can define as a flash crash mistake. This crashed because people didn't understand the news. AMC is now holding tight at that $10 figure, which is where it crashed from. So this is the definition of too many investors had the wrong idea of what the news actually meant. And then it overcorrected, thinking that, oh, it not only misunderstood the news, but the box office was great. It tried to push $11, did get up to $11, and then traded sideways ever since that realization that back to same old, same old. So right now we're expecting that AMC is likely going to be following that same track, although this bounce early morning could indicate that we are going to see another paper-handed bounce as well. So go ahead and give some scissors in the chat for those inevitable poor paper hands selling at a loss. Their lives are not easy either. So GameStop, on the other hand, now we see that same cup right here. This flash crash fake out, essentially, right? Because we heard the news early on about GameStop that they are going to start having the option, right? Once again, the option of, hold on, let me just see, GME release, GME.com. Well, we saw multiple times on this show where they said that they would like the option to sell 3.5 million shares. And so that option, once again, got people confused. They're like, oh, they're going to sell the 3.5 million shares. It's going to mess up the squeeze. People decided to flash crash the stock down $40, right? From a high of 195 all the way down to 154. So that's $40 during the pre-market. Some people are like, is the squeeze going to happen pre-market or after hours? There's a lot of volatility that can happen pre-market or after hours. So this is the question here. GME gets all the way back up a few hours later, almost the exact same point. You might even think this is a cup and handle, right? Based on if you didn't have any information about what kind of news catalysts there were. No, this is just a major correction based on some bears that followed the news too closely and got confused. So do not be confused, right? Panic selling, it only hurts yourself at the end of the day. Because people are going to go back and eat up the stock that you caused a dip in. And then you're going to be out of a position, probably at a loss. And you are going to be confused about how you got kicked out. And that's likely also why limits, if you have a trailing stop loss, if you had a limit to actually kick yourself out of your own position because you were afraid GME was one day going to hit 20% down again, yeah, you would have hit 20% down during pre-market and you would have been kicked out. I need to add some water. I'm going to go through and ask a couple more questions here. Ooh, that's a good idea. I bring the water jug here. Okay. This is a very strange DD here. Why the borrow rate is so low and why we want it to be as low as possible. And we also have, who is this? A token, right? So let's get your walk like a duck, talk like a duck, buddy. Oh, there it is. That's Austin's walk like a duck, talk like a duck. Once again, remember, we have an exclusive DD coming out with Austin about rehypothecation on this channel. So if you guys haven't yet helped us try to get up to 100,000 subscribers, this is your early morning call. We're trying to get up to 100,000 subscribers by providing you content that you want to listen to. So we're looking in the chat right now about, do you guys want to look at the charts? Do you guys want to look at more financial education? Do you guys want to look at news? Because some of you are not as caught up as the others. So thank those of you who are super caught up for being patient. Let me see what's going on here. So we have DTCC form here. These are all interesting pieces of news, but I would rather keep looking at the options chain just for the little extra kick of being able to actually understand what kind of put ramps that we're looking at sliding downward from 180, and if there are any additional calls on the way up. Let's look at April 5th actually. So you might have noticed that people are talking about how after the fact that after 005 was passed, there hasn't been any more deep in the money calls. So on the 5th is the first opportunity for them to not have deep in the money calls. And then let's look on the 1st. It's loading. Look at all those deep in the money calls. So this is the like $120 million of deep in the money calls on the 31st. So not that this is a perfect correlation, but look at these deep in the money calls and now compare them to the fact that hedgies did not buy deep in the money calls for the first time. I think this is a tricky, this is not the first time. We've been following the options chain for a good amount of time, right? And they've recently started to resurge these deep in the money calls that if you guys go back and look at the live stream, we check the options chain every day. We've recently started to resurge the deep in the money calls from a month ago. So a month ago, we saw a bunch of deep in the money calls. Someone made an explanation for that. And then a month later, we started to see that again, more and more every so often. But now for the first time on the 5th, after 005 was announced on the 1st, we did not see that anymore. And we didn't see that on the 6th either. Let's see. Going through the questions that you guys have here. Jonathan Correll says, "Did you get a chance to get like SOS when you have a chance?" Sure. So let's put SOS in our guest spot here. Beautiful. And then Cam just throwing a bunch of diamonds, rockets, and gorillas for Cam. Guys, throw some diamonds, rockets, or gorillas. Let's see who wins in the chat as we just had markets open. Where's my bell? Oh, baby. Let's see. GME right out of the gate with that. Starting early on that paper-handed dip. Paper-handed dips all day. You just get those retail investors in the market and suddenly they go, oh no! So let's see if GME gets supported at 180. Let's look at AMC. Where is our auto? Our next level of support is at 996. Where has that 996 been relevant before? Okay, here, sort of. Let's see it. So you get let's see if these two levels of support get caught. It seems like GME, it's already getting caught. AMC as well. Old Nut says, good morning, America. It's 2:30 p.m. in the UK. Ooh. All right, so GameStop bouncing in between this $4 range between support and resistance, 180 between 184. Seems like it has done a much faster bounce than we have expected in the past. Bounced right off of 180 and now it's starting to push 183. Oh, dokie dokie. Just gonna check a couple of things here. AMC, on the other hand, is currently pushing down below that that $10 mark, just at the edge. So what we expect to see is AMC. Let's pull up the option chains briefly for it. And SOS, you are coming on deck. I need to favorite this. Okay. So as of yesterday, this is what the AMC option chain looks like. Good amount of battlegrounds right between $10, $10.50, and $11. So this is currently where AMC is going to be seeing the most resistance, battling it out here. GME, on the other hand, has barely any information from the last day, at least, on the amount of gamma ramp either way that we should expect. Where Lambo? Where Lambo indeed. Let me actually add, I forgot to add this to the pin chat. So if you guys have not seen the Tiblio options tool, that is a really good way to be able to access the options chain and be able to understand the calls and puts in a more specific manner. And their free tool is great, their premium tool is great as well. Go check them out, I just pinned them in the live chat. Okay, be patient with our GME. It's okay, GME, take as much time as you need. So AMC and GME have small wicks that travel slightly below, at least in AMC's sake, below its support level. However, GameStop, like clockwork, being supported at 180, just not going anywhere beyond that. It likely is going to start building up some momentum here and then push past 184 if it can continue to be supported by that VWAP here. Let's see. So one of the most important questions here is that some people are asking about Bollinger Bands and Keltner channels I've seen in the past, right? You can actually turn on these indicators and then you have the ability to have a little bit more of information about pivot turns and exactly when to expect major changes. Personally, for me, I like looking at the MACD, and it doesn't complicate my my pricing chart as much by having a separate indicator down here for my bullish and bearish momentum. If you ever wondered what the colors on my chart mean, well, we have the purple 200-day exponential moving average up here, right? We have the blue chart here, which is the 15-day simple moving average, right? Gives these two respectively give us a macro and a micro sense of the momentum that we are expecting. Right here for MACD, this moving average convergence divergence gives us an idea of when bullish momentum becomes bearish momentum or vice versa. This is a great opportunity for us to understand when to enter. And finally, for the well, actually not quite finally, we have RSI, which is the relative strength index, gives us a sense of exactly what we're looking at the moment, whether or not we are chancing being overbought or oversold. Above 70 is overbought, and right now we are hovering right here at 30, that is oversold. So that means we are likely going to be able to start seeing a bounce, or at the very least, a small reversal. At the very bottom, and AMC, sometimes I cover it, is the OBV. That gives us a sense of the volume-driven price, right? So that's something it gives us a bit of a prediction of exactly whether or not the price is actually sustained and predicated by that volume. Especially since we care about the VWAP so much, we have the orange line here, easier to see over here in GameStop. That is the volumetric weighted average price. Gives us a great understanding of what the true price of the stock is based on the volume that is driving the price. Audio sounds strange again. One sec. Of when bullish momentum the index gives us a sense of exactly. Okay, I was just checking my audio. Let's do this. Let's change that filter. Let me know if it gets better. Okay, let's see if that gets better. Here you go, bud. Okay. So let me know if that is better. We are gonna go take a look at SOS. So let's take a look on a daily chart first, actually, because I have a couple of lines already drawn back when SOS was having a major rip back in February. So that is where I was drawing a couple of the lines from a previous rip, right? No? Okay. Well, in essence, we have this this contested resistance and support. It's a $3 between 5 and 9. Between 5 and 9.50. So that is roughly $4.50 of range that SOS has been bouncing predictably for the past few days. Now it actually has started to dip below this worse. Okay, sorry. Okay, let's try that. Technical difficulties, excusez-moi. Range that SOS has been bouncing predictably. Scooter McDuder says, power steering pump just went out. To fix it myself will cost me as much as a share of GME. Anyone else calculating living costs and shares of GME? That's a really good one, actually. I also think I should calculate shares of GME here. Okay, let's try that. Technical difficulties, excusez-moi. Unless you're static shock. SOS has been bouncing predictably. Scooter McDuder says power steering pump. Yeah, let's just keep it here. I am one day gonna just watch a YouTube video. I don't know, because I think I have a pretty good audio setup, but I definitely have been wrong in the past. Speaks for itself. So as of right now, I think SOS is on a path of trying to push past this level of support that it has recently turned into resistance. Since it has been able to, let's look at it in the 30-minute chart. Since it has been able to during the aftermarket and the pre-market sustained it, we have to ask the question, well, is this dip going to bounce off of 522? In which case, then is the perfect entry point. SOS, I think right now is likely to bounce off between $5 and $9, which it has been doing the past few weeks. Predictably, unless we have a news catalyst, this is one of the biggest opportunities for SOS to be able to have an excellent entry point, as its behavior right now is very easily to predict. The best way to be able to understand when is the best point is to try and guess where the MACD is going to start crossing over the signal line. And it depends on what chart you're looking at. If you're trying to scalp, the 5-minute or the 1-minute chart are fine indicators, but if you want a long-term reversal, then the 1-hour chart is likely more important, or even the daily chart. Turn down the gain and move the mic closer to my face. Oh, actually, that I can do. Okay, we're going to be making the show better right now. Slide this mic underneath. Actually, you can go over. Okay, So I think that'll be better. Let's turn down the gain a little bit. Done. Okay, so you should hear me better now. Let's find out, because this is actually an easy fix. So thank you, Scooter McDuder. Meatball, you want another treat? Let's give Meatball a treat for the likes that you guys have dropped in this video. 400 likes. That's 4 treats. 1, 2, 3, 4. Thank you guys so much for supporting the stream. Smashing that like does help defeat that YouTube algorithm, and we know you're listening right now, Mr. YouTube. Way better. Aw, thank you. Okay, so now we are actually cooking with Crisco. We're actually playing with fire here. If you guys do have any other ticker symbol suggestions, let me know. Otherwise, I do want to be able to cover exactly what is going on here. I do also wanted to cover why is the borrowing rate low and why we want it to be as low as possible. If you guys aren't aware, this is a very important metric that we have been focusing up on the last few weeks. AMC holding tight at 10. I think that it has been supported multiple times now, but I might actually be a little lower than I've drawn it here. It's actually, if it's by the body, it would still be down here. By the wicks, it'll be even lower. So 995, just 2 cents lower than I had it. And then for GME, yeah, it's still staying at 180 and $10 for GME and AMC respectively is currently what we're looking at here. Okay, TCAT. So let's look at someone wants to see TCAT and RMO. So TCAT and RMO, and then we're going to cover why the borrowing rate is so short. So, sorry, the borrowing rate is so low. We also need to understand, why did they not borrow yesterday? Why did they, why did they not put deep in the money calls in yesterday? Well, is it because they can't, or is it because something more sinister? So GME and AMC news coming up in just a sec. TCAT seems to have actually, so this is the daily chart. TCAT seems to be petering out after this. I remember that there were 2 crazy rallies before. So it was breaking out at around $6, and then this rally brought it to 25, and everyone's like, it's done. It was not done. It then rallies to 46. So that was from $6 to 25, then 25 to 46, and it still wasn't done. This was anybody's game. I did draw out this level of resistance here. Once you saw TCAT push through, you should have realized that this was where the MACD did a major divergence from the signal line. That would have been a great sign to be able to say, holy moly, this is going to be huge. TCAT then rose to 73. If you held your TCAT instead of panic selling, you would have made it big at 73. Now it is trading sideways for the last few days at around somewhere between 35 to 45. As of right now, I don't see a major catalyst in changing TCAT. Everybody was hype about NFTs in the past week, and now people are starting to realize that the bubble is here. I even put a poll out if you guys want to see what the community thinks about NFTs and cryptos in general and altcoins. So as of right now, I say TCAT, you do not have an excellent entry point as of right now because of the likelihood that the bubble is not only to deflate, but is likely going to burst soon for NFTs in particular. All right, so let's look at RMO. RMO, then Riot, and then we're going to be able to take a look at the borrowing rate. RMO had a super rip yesterday. Big bully corner yesterday. Starting from pre-market. That's why you guys want to access pre-market, right? Use the WeBull link in the description. You want to be able to jump on the train here so that you guys don't miss out on some pretty sweet tendies in the market, pre-market, and after hours. About $8. 1, 2, 3 beautiful subwaves for a perfect impulse wave for the day, up to 1378. And now looking into a correction. This correction doesn't seem like it is quite over. In fact, this correction seems like just one wave out of multiple. However, the duration of these subwaves gives me pause in that this is just likely sideways consolidation downward. So if you do see that the VWAP is currently, sorry, not the VWAP, the MACD is currently trading below the signal line pretty consistently on the 30-minute chart. If there is a major resurgence, there is an opportunity for you to get in. However, unfortunately, this might have been a runaway stock already. So as of right now, if you're not in already, do not catch a runaway stock. You will get hurt on the way down. So RMO, as of right now, I wouldn't suggest anybody jump in too soon. But I can't give any suggestions at all. I'm not a financial advisor, and this is not financial advice. Very quick, why is the short borrowing rate so low, and why we want to be as low as possible? We saw a DD over the weekend, which was mainly about the shareholder meeting will be, and when a share recall could be predicted. However, buried in the wonderful DD was a short bit about last year's share recall, and why BlackRock and other whales did not end up demanding their shares back. Sorry for the paywall. However, this is one of the main points of the discussion, and the borrowing fee was super high during this time period, 700 to 800%. Therefore, it made sense for BR and others to keep making money on those fees and forfeiting their voting rights. With regard to the relationship between securities lending and proxy voting, BlackRock's approach is driven by our clients' economic interests. The decision whether to recall securities on loan to vote is based on a formal analysis of the revenue producing value to clients of loans against the assessed economic value of casting votes. Generally, we expect that the likely economic value to blah, 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 blah. Okay, so determine that the value of the voting outweighs the cost of recalling shares. Folks, the borrowing rate at the time of the call yesterday was topping between 70 and 100%. Therefore, BlackRock decided that the gains from the borrowing fees outweighs the gains from the voting rights. Okay, so too long didn't read. BlackRock and other long whales have purposefully suppressed the borrowing fee to justify a share recall for the upcoming shareholder meeting in June. This is suspicious to me. This is likely going to, this is a spin conservatively, but it could just be a bullish article with a lot of speculation in the worst case scenario, because BlackRock, being a long whale, is a hypothesis that currently is being tested, right? BlackRock is buddy-buddy, right, with the other hedge funds, and as of right now, BlackRock bag holders. In Austin's case, he even had some specific caveats to the headcanon that BlackRock is currently working against all of the other hedge funds. So as of right now, this is good speculation, but it doesn't really explain everything about why the borrowing fee is so low. So I do want to be able to cover hedgies did not buy deep in the money calls for the first time. That's pretty huge, actually. So DTCC new rules prevent hedgies from covering up FTDs with deep in the money calls. I actually do want to make a video about that. So real quick, bear with me. Let's make this video. It's going to be about like a 60-second video. Hey guys, this is a quick 60-second update on the options chain. You guys know that we have been seeing some strange activity starting as early as last week. We can go back to March 31st, for example, and saw that we had deep in the money calls. This has been explained in multiple videos about exactly why you might be seeing this. Right here on the 31st, we have $24 million of a $12 strike, right? Added together, this is at least $100 million here of deep in the money calls. Who expects GME to be worth $3 in the next couple of weeks? Well, this was exposed as the hedge funds and Melvin and Citadel trading FTDs between each other to provide cyclicality for them to be reset. We saw this for a couple of days in a row, March 31st and April 1st. We saw that exact same scenario with a lot of deep in the money calls on the far left, right over here. Even more, $72 million worth of $12 strike deep in the money calls. However, we see that starting from when the DTC 004 rule was announced on the 1st, there has been no more, right? Hedgies did not buy deep in the money calls today for the first time. I mean, this is a great announcement by user Dan Bren. However, if you have been following the option chain with us every single day on this channel, we go bell to bell understanding the stocks that you guys care about. You would have noticed that on April 5th, we did not have any deep in the money calls. This was the first day after April 1st that would have allowed us to equip the time stone on the Infinity Gauntlet, right? There's absolutely nothing here for GME. And now on April 6th, that was also an opportunity to see absolutely nothing in the deep in the money calls corner. So too long didn't read right here. New DTC rule 004 prevents hedge funds from covering up FTDs with deep in the money calls. So are we gearing up for something bigger than what is currently here? Is DTCC finally starting to gear up, getting ready to kick out hedge funds by themselves with the 801 rule? Let's find out together. If you guys like this video, please do drop a like on the video, and we will see you next time in the money. Okie doke. Lord Weird is back. Thank you so much for your service, mods. Everyone, throw some scissors in the chat for mods and their continued work. Okay, back to the stonks. So if you guys have ticker symbol suggestions, drop them as well. GameStop seems to be double, triple, quadruple testing 180 a couple of times a couple of minutes ago, and it does not seem to want to hold. So that 995 strong bottom for AMC, and this 180 right now, very strong bottom for GameStop. Hyun Jung wants me to look at Viacom. Let's look at Viacom real quick. Viacom. Okay. Let's do Riot. Riot blockchain. So Bitcoin had another tumble recently, down to 56,800 right now. So if you guys don't have your BlockFi link yet, it's a good time to get $250 of free Bitcoin. Let's take a look. So Riot is currently staying in between these two channels that I set up a while ago. Right here, this level of support is at 33 bucks, and the level of resistance at 69. Now that is a hefty amount of range. However, it has stayed consistently between these two for a long time. I would say that this is an interesting level here at 53, right in between. It bisects these two support and resistance levels also. It is now a brand new support turn resistance. So we've been supported here at least one time in the past, and now we have been resisted here twice. So it is currently trading right underneath that level of resistance. I was expecting there to be a bounce here in the early morning to be able to push past. If that is the case, this is an excellent entry point, because we know that it then tries to recontest $58. So in that sense, it is currently on its way to try and as we speak, trying to contest $52 right now. This is a great pattern to be able to recognize that there is a reversal in play. Whether or not it gets rejected at 52 is the current barrier of whether or not it can actually sustain this reversal. Let me stretch. Oh, I love to stretch. Okay, so MP. So I'm gonna give the members I've been told that members that have the green names feel a little bit left out, that I don't have a chance. I'm just reading as much as I can and giving you guys a random chance of getting it in here. But Kyle G said MP materials, so let's make sure that he gets a fair look. If you guys did want to support the show as well, the join button is also down below next to the subscribe button. Wow, doing a 5% rip seems big. Grand scheme of things though, let's zoom out a little bit in the 30-minute chart. Doesn't seem that big. What's concerning is that 3 days ago, the exact same parallel red candle was in the beginning of the day. So this is like a extended bounce that is finally catching up to itself. So as of right now, I would say that MP has the opportunity to be able to turn into a brand new level of support. Because if it does push past this level of resistance here at about 36, then that is going to be strong bullish momentum forward. However, then it gets to the territory of pushing against that 70 RSI, which it already is getting dangerously close to. So I would say that MP right now is in danger zone. Try not to chase a runaway stock. However, right now, if we look at it on the minute chart, I'm sure there's going to be a little bit more information in terms of the waves. OG Low says, Omi is my homie. GME and AMC are my babies, though. Okay, let's look at Omi. Jillian Marchioli, what's going on? Gorilla Jill. Okay, well, there we go. It's like WeBull doesn't want to play today. Whoa, now. Whoa, no. So Materials Corporation, also on a bit of a rip. Weird that most of the market is red, except for the these particular ones. Ocugen is up 5%. MP is up 5%. So what I would say is this growth is not wave-based, even though there are small dips here. I would be cautious to say that these are actual like impulse waves here. And even if there are, we already have the prerequisite 5 subwaves here to top out. And the longest subwave is between 34 and 35. So honestly, you're not going to be able to see much more than a push to 36. Let's see, the last time the MP was that high was a hard resistance. Actually, this is descending resistance too. But there's a hard level of resistance here that was supported before. So this is a great barrier right before us at 37. So if you jump in now, which is not a great entry point because all you're going to do is contest the EMA and then have to contest this 37 barrier right after. So not a strong position to enter. Okay, so let's take a look back at the news. Walking like a duck, talking like a duck. So this is Austin's DD that since he was on the show, we didn't have a chance to cover yesterday. So let's actually give it its time of day, but it is quite lengthy. So I do want to be able to say that this is coming up. I'm going to do a couple more tickers just so that people feel like the stonk questions have been answered. The stonk doctor is in the house. But then we're going to be able to cover Austin's DD here, which, boom, he has a full case. He got to talk to a congressman yesterday. He was my co-host with Congressman Ro Khanna, and Ro wants to hear what bullet points we have for the case here. So that's one of the things that I want to be able to point out. Okay, let me drink some water here. Where did my water bottle go? There it is. Agua. Boy, do I love agua. Once again, thank you guys for supporting the show, right? Just keeping that energy level light. I appreciate it. Let me hear how my sound sounds right now, actually. Might sound better. Than a push to 36. Yeah, that does sound better. Thank you, Scooter McDuder. Okay, so we have Neo, ODT. Okay, I've heard things about ODT. I do want to check that out real quick. 15%. Oh, look at that. On the daily chart, you can barely see anything. It's just everything just kind of gives you a sense of the grandeur of life itself. Just like when your stock is up 15%, is it really like that big of a deal? You might get your tendies, but like the world goes on. So what we're looking at here is ODT pushing at $4.12. I think this is its overall high. No, so this is the stock that fell off a cliff back in March. This is the stock that fell off a cliff back in March. We saw this like 12-15% resurgence over here. So it actually, it's not like it didn't act like this before. It's just a little bit higher than it was back in the end of March. I would say to keep an eye on this stock because I'm not sure if a major news catalyst has actually come out about this yet. ODT, no, nope. I don't have too much high hopes of ODT at the moment because of the behavior that it, because of this behavior back in the end of March. However, as of right now, it just needs a little bit more eyeballs on it, a little more perceptions. That's I'm happy to give it to it, but as of right now, I need to see a news catalyst. C5TR8 says, "Thank you for your time and dedication to the attempt. My first wrinkles." His first wrinkles. GME falling so low. Mavis has run away. Run away from me, Mavis. Okay, so we tracked this crazy power hour growth from Microvision the other day, and then it's been a slow bleed ever since, a little bit of consolidation and then more bleeding yesterday. This dip was quickly caught, so this is a major flash sale to correction. This reversal was brought to you by that subscribe button. No, just joking. But as a reminder, what the Microvision chart looks like right now is basically a counter to what happened earlier, right? That this is $15. This flash sale was quickly caught, and it did not even overcorrect. So now time for the overcorrection. Right, this is bringing Microvision back to the levels it was trading at pre-market on the 6th, right? This is one of the opportunities for you to be able to say, hey, Microvision, what are you actually worth? This is these two levels of resistance and support that I tracked out before because it was once upon a time ripping to the high heavens. I will say that this is likely now starting to become a strong level of resistance. So do expect some turbulence here. It hasn't quite reached it yet, and it actually got rejected a little bit earlier than being able to make it past $16, but 1630 will definitely give it some trouble. Okay, soon we will be doing walking like a duck, talking like a duck. Nope, that was better before. There we go. Good morning, Meatball. Ticker symbol Meatball. Ticker symbol Meatball. Here you go, bud. Okay. Walking like a duck, talking like a duck. What is this, volume for ants? So Mavis is in our bully spot right now because it is up 5%. Not as much as ODT, which is now actually up 20%. Let's keep an eye on ODT, right? If it's already up 15% and then you try to get in, you can go up to maybe 25% higher, right? You could go, it depends on whatever catalyst is trying to drive up ODT's price, but the diminishing returns is already in effect. And the risk profile on a correction is way scarier than the marginal increase you can get by chasing a runaway stock. Let's just see how long this is. So once again, okay, let's just do this right. Hey guys, we had Austin Tobit, or also known as A. Tobit, on the show yesterday for almost like 3 and 4 hours. That was ridiculous, and we didn't get a chance to actually go through his DD, which he is going to start packing up, and he and I together, along with Mason, a member of Ro Khanna's office, is going to be able to start giving that congressman a list of bullet points, and ultimately something that we can start passing on to other congresspeople as well. So know that once we have this DD bulleted up and ready to send out, we are going to start making some moves to push this to Congress. A walking like a duck, talking like a duck, a case that strongly indicates that Citadel Securities and affiliates are committing securities fraud. So if you guys are curious about exactly what is going on here, make sure that you have already smashed that like button. Make sure to continue and ongoingly smash that subscribe and the bell button. I know 10% of you are actually notified of these uploads, and I would like to jump that to 20%. So those of you that have not pressed that bell, I really would appreciate it. And onwards we go into this video. March 26th, Finra released a new citation against Citadel Securities for nearly 2 years worth of securities violations. The only reason Citadel hasn't been busted for fraud is because they hide behind the veil of unintentional behavior. However, this post illustrates how Citadel's actions flag all 3 corners of the fraud triangle: pressure, motivation, and opportunity. It's time for these people to be held accountable. This is so well formulated already. The main thing is that people like threes, and being able to have, guns, germs, and steel, right? Pressure, motivation, and opportunity. This is going to be able to be eye-catching, because in the court of law, there usually has to be certain perfect storm pieces that get set into place, and this seems like the perfect storm. So don't go anywhere, continue watching. Trying something new this time. Recorded a walkthrough of the DD with user Is It a Buy prior to dropping the DD. If you want to watch that, click here. And if you guys are curious about that format, he is going to do the exact same thing on this channel exclusively about rehypothecation, so you guys don't want to miss that coming out later this week or the next. My fellow apes, many of you are wondering how these posts about Citadel relate to GameStop. Perhaps I've lost sight of explaining this connection, so let's clear it up. As Alexis Goldstein pointed out, you just never know what a company's short position is because they aren't required to disclose it. And unfortunately, she's right. And this is the most important piece. She's even said in Congress that we do not have enough transparency to be able to actually figure out where we are, what we're doing to fight the shorts. How can we fight an army that's basically invisible, right? This is the dangerous piece of the pie. We are looking at AMC, we're looking at GME, we can see their price, we can see call options and put options, but we cannot see the shorts, only what Finra reports on a 2-week rolling window, which we are going to be taking a close look at on a regular basis. We've always looked at it, and there's one coming out tonight. So what we can do, however, is expose the shenanigans surrounding them. The fraud triangle works because people act maliciously when they have pressure, incentive, and opportunity to commit it, period. This means if it walks and talks like a duck, it is most likely a duck. So let's try and look at these 5 points right here. Number 1, the Finra violations for naked shorting, failing to post a short sale indicator on transactions, withholding large customer orders to lower the market price, flash crashes. Number 2, the growth of rehypothecated assets for both treasury and equity securities, especially in 2020. Number 3, the growth in liabilities as their promises to repay keeps getting bigger and bigger, especially in 2020. Number 4, Finra's concern regarding the lack of preventative measures within their system to detect these issues. And number 5, the number of times they've been documented for accidentally removing logic to detect these issues. Boom. Just a laundry list of, investigatable, verifiable, criminal activities, right? Everything fits all within corners of the fraud triangle. Citadel commits violations just to name a few million, make a few million, knowing their fines are essentially just a small tax. And now that we have even covered to Ro Khanna yesterday that the tax that SEC or maybe another organization files against these criminal activities is almost serving as an incentive for these criminal activities to continue. It's a kickback for the governing body. So that is pretty sad. Like Homer Moon Hickam says, what are realistic possibilities here? 1, we wake up, hedgies cover, stock plummets, we hold and support GME. Or 2, squeeze Lambo. Is that it? Yeah, that's about it. So either we win or we lose. And this is the clear and compelling boilerplate right now. I'm not a financial advisor. This is not financial advice. Neither is Austin. So he's not giving you financial. He's not giving you financial advice either. If you guys have decided to join the movement or start your investment journey, it doesn't have to be GME or AMC. I would really recommend that you guys continue learning with this channel. And the best way to do that, smashing that like button and that subscribe button so you don't miss a single live stream. We do go bell to bell. For far too long, people with money have been draining the wealth out of the global economy. Everything around us becomes more expensive and the power to do anything about it decreases. We are forced to think about pinching pennies just to make ends meet, while there are people benefiting from all of this injustice, the ultra wealthy. I could speak more about the Stop Cheaters Act and how Ro Khanna is fighting against the ultra wealthy yesterday, but I'm going to just try and power through this article here. Aggregation of wealth has been going on through the scenes for centuries, slowly and gradually like a frog sitting in a pot of boiling water. Debt has been designed to be carried for life. Their confidence and greed has reached a level so high that it would have been impossible for them to fall on their bet against GameStop, for them to fail. But the only thing that could blow their victory was if we all started listening to each other, and most importantly, learning. It seems like Austin is working with the channel, getting the vibes of the channel here. GameStop is the linchpin. GameStop opens the floodgates. GameStop is our checkmate. GameStop is our hedge against the funds. Now that is the tagline, ladies and gentlemen. If you weren't aware, we're gonna have Vice come shoot in my apartment on Sunday about the GameStop saga. So if that's exciting to you, this could be a tagline right here. I'm gonna pitch it for Austin. GameStop is our hedge against the funds. Oof. So now that's been cleared up. This keeps coming. To me, this is further evidence of the desperate actions within a rigged market. After calling out Citadel for shorting U.S. Treasuries, they recently found out they've been slapped with another Finra violation on the 25th for U.S. Treasury securities. Seriously, just a week ago. By the way, this wasn't even something that he was searching for. He was walked Corey, the host, through the investigative process and uncovered it during their first live interview. And this actually happened very similarly yesterday, right before Ro Khanna. He jumped on the chat and he suddenly was like, yeah, I found another thing, a brand new thing. And this is just the investigative process. These violations occurred between 2017 and 2019. To me, the reason why this violation is so monumental is because it represents the first Treasuries violation. Finra issued them a $250,000 fine with a censure order, meaning that they disapprove of Citadel's actions. Yeah, we really don't want you to screw over people here. Stop it. Overview. And from July 2017 through October 2019, they incorrectly reported internal transfers at Treasury transactions when they were not reportable. They failed to append the no remuneration indicator to trace reports for certain Treasury transactions between affiliates, and 3, failing to include the correct contraparty type in its trace reports for certain affiliate transactions. Because its supervisory system, including written supervisory procedures, WSPs, was not reasonably designed to achieve compliance with trace reporting rules, because it could only detect violations that would generate automatic alerts. In all cases, the incorrect trace reports involved internal position transfers or transactions with affiliates and did not involve transactions with clients. So number 1, incorrectly reporting. So this is just a recap here, 1, 2, and 3. In all cases, the incorrect trace of reports involved internal position transfers or transactions with affiliates that did not involve with clients. So this is the most important piece of the pie right now. So I'm not a lawyer. I don't have a master's in accounting like Mr. Austin does. So likely he is going to be able to circle us back here. What are the related party transactions and why do they matter? The codification explains related party disclosures under ASC 850. Here's a link from Deloitte that gives a decent overview of 850.10. A typical related party transaction occurs just like a normal transaction, but the parties involved have a connection somehow. They can be 1, a parent entity and its subsidiaries, 2, subsidiaries of a common parent, etc., etc., or affiliates. Transactions can be any of these following. So go ahead and read through this list as well. So from anywhere from sales, purchase, and transfers of real estate to intra-entity billings and allocations of common costs. When you have these related parties or affiliated parties, the biggest concerns is that a relationship materially affects the way that business is conducted. For example, you should disclose situations where subsidiaries are conducting transactions with the parent entity, and there are other caveats as well. There's an example right here by Austin. He explained this as well in person, but as a reminder, this kind of stuff is a little dry, so I want to push through real quick to make sure you guys actually get to the points. This is exactly what Enron did with their special purpose entities, SPEs. Remember, this is back in 2008, where they were pushing around bad assets and pretending like those liabilities are actually assets that they are leveraging against. Q violation number 1. So this is the very first violation here. Through December 8th, 2018, Citadel Securities reported almost 500,000 treasury transactions to Trace that it was not required to report. These reports constituted over 14% of the total treasury reports the firm made. The overreporting occurred when the firm transferred treasury securities within its internal accounts. Okay? So when you send transactions to the Trace system, they ask you to prove that they are legitimate. If they are legitimate and occur with an affiliate, Finra needs to know that. So this is to prevent frauds like Enron from happening again. Breaking this down, Citadel overreported 500,000 securities transactions, which represents only 14% of total reported transactions to Trace. This means that Citadel reported 3 million treasury transactions, and one transaction doesn't necessarily mean one treasury, could be thousands. 2, they were not required to report 14% of those because they should have flagged as internal transfers and not treasury transactions. So now we begin to uncover the corners of the fraud triangle: pressure, incentive, and opportunity. Citadel was obviously compliant for 86% of their treasury reports, so why would they feel the need to unintentionally over-report 14%? So back to the slogan of this article: why are you walking like a duck? How did Finra find out that these are actually internal transfers? Probably the same way that Austin did, by looking for clues. Check out Citadel Securities related party disclosures from 2020. So there's how he was looking for clues here. CSHC, introducing Citadel Securities Institutional LLC, right? This sounds a lot like Citadel's, another arm of Citadel. Think it's the same company? Nope. They're so different. Look at that one. This one and this one. That doesn't even look like the same color blue. Come on now. Citadel Securities Institutional is a completely different company in the books. These guys are affiliated to one another, but exist as special purpose entities, or SPEs. So, Citadel Securities lists CSHC as an affiliate and the sole member of the company. Citadel Securities Institutional lists CSHC and also as a sole member of that company. CSHC had to go back to a financial disclosure in 2016 to dig up this little jewel. CLP Holdings 3 LLC, CLP3, and then CLP3 merged with CSUH. So who is CLP3? Citadel Securities is a wholly owned subsidiary of CLP Holdings 3. Oh, so these is basically just a bunch of shenanigans by pushing around a couple of other companies. Let's make this clear. Number 1, Citadel parent owns 100% of CLP Holdings 3, which became CISA in 2016. CSHC is the only member of the CSHC US LLC, and then CSHC is also managed by Citadel parent. So basically, Citadel, but they're passing themselves off as different entities. No wonder why Finra was pissed. It looks like Citadel took treasuries from Citadel Securities and transferred them to Citadel Securities Institutional, but then reported them as sales transactions to Trace. So it's like me asking you guys, hey, how much do you think this bottle of Glenfiddich is worth? $100? Great. That'll be $100, me. Thank you, me. Good thing I have a flat stack of $100. Great, I just made $100 in sales. Thanks, me. Does that sound legal and fair to you? And again, this is kind of the dangers of this market, is that we are allowing Citadel to be able to do this shenanigan. The institutions that we are angry at are just taking advantage of the fact that our system is manipulatable. There is always going to be some cracks that we cannot cover. However, this is one that we have uncovered. So it's time to pave over this crack. Okay. So let me just go straight down here. If you fail to indicate this, you also report internal transfers as normal transactions. It really starts to look like you're covering your tracks. Why are you talking like a duck? So that was violation number 2. Now violation number 3, call this the smoking gun. Citadel Securities reported that the contraparty is in a transaction with a customer, was a customer when the transaction was actually with an affiliate, right? We already covered this briefly. But Citadel Securities gets busted pushing transactions to trace when they were really just internal transactions between special entities. So they're then cited for failing to indicate a no remuneration transaction with affiliated parties. And they misclassified the nature of the contraparty in 11,000 transactions, saying they were customers instead of their own, you guessed it, SPEs. So this is the easiest way to understand this is you have an Uber Eats code, right? You go out and you say, hey, who wants my Uber Eats code? Both of us get $15. And then you open up like 15 accounts and you say, oh, look at all these people that I'm not affiliated with. Wink, wink. They are customers of mine and they just got the Uber Eats code and all of us got $15. However, that's just you 15 times. So that is what obviously you're misreporting you should be angry about. And that is currently what the SEC fined for $250,000. Really basically just a slap on the wrist after this. So let's bring this all together. Thank you, Austin. Number 1, Citadel Securities sell treasuries to affiliate parties, such as Citadel Securities Institutional. Basically, they sell treasuries to themselves. Citadel Securities marks most of their transactions with a no remuneration indicator after selling the security to an affiliate party. So this is what they're supposed to do. And to Finra, this complies with the trace because it looks like a typical transaction without a markup marked down on the price of the treasury. Number 4, at the end of the month, Citadel Securities reimburses Citadel Securities Institutional for the cost of their treasury purchases, plus a little more in profit for their services. And number 5, Citadel Securities records the commission revenue from Citadel Securities Institutional once the treasuries are finally sold to the outside party. Did you catch the loophole? Citadel Securities is able to remain compliant with Finra because they pay for the services provided by Citadel Securities Institutional after the transactions are cleared through the system. They are disguising them as service fees. Instead of paying during the transaction by remuneration, they simply leave it off the books and hide it on their financial statements. The SEC and FINRA are both regulatory agencies for financial institutions. Austin is 100% convinced that the SEC has given the responsibilities of investigating fraud to FINRA while SEC works on creating the legislation to stop these acts. However, it appears that the SEC and FINRA are working as totally separate agencies while the SEC is supposed to be overseeing FINRA. So now Austin is convinced that the money flows directly to the SEC from FINRA fines, and the SEC is at risk of losing that revenue if they actually start cracking down on these, well, these pigs, these bad people. He's presenting a genuine case, and once again, we are now going to start putting this together in a document for first my congressman, Ro Khanna, who came on the show yesterday, and then to your congressman. So if you want your hands on this document, all you need to do is say, thank you, Mr. Andrew, Mr. Mo. I would like that document very, very much. And in the comment section down below, let me know which congressman you would be sending this to once we are finished with it. Once again, we have Mason coming on the show later on today, so he is going to be able to give us a little sense of how to speak to a congressman, right? What exactly gets his attention, and I think that's going to be an enlightening conversation as well. If you guys are excited for an exclusive Austin rehypothecation content DD, then that's coming up this week. Like I said, thank you guys for reaching this part of the video. I just wanted to show you guys a couple of people that really help make this show possible: the Moon Platoon, the Meatball, the Space Legend tiers, and the Gorillionaire tiers. I want to thank them a lot because they went down to the description and pressed that join button for YouTube to stay on the platform. Super easy. less than $1 a day, and it really does help out the show. $4 a month, right? So that is something that I do want to leave you guys with, and for now, but not for forever. I hope you guys already got your 2 free stocks from WeBull and $250 of free Bitcoin from BlockFi. They're in the description down below. We will see you in the money. Peace. Hey, almost 3,000 of you in here. So I believe I was shadow banned yesterday, and that was rough. But now I think I'm slowly overcoming that shadow ban. So throw me some, how about this, rockets in the chat if you did get my rockets in the chat if you got my notification this morning, because you have notifications turned on and you heard me go live. And then throw me some, can I do paper clips? Show me some paper clips in the chat if you did not hear me go live. Okay. Okay, let me see if I have any questions here. Fazan says Deutsche Bank sees significant market pullback in the next 3 months. CNBC seems like to be referring to the S&P 500, but this could be telling they're projecting shenanigans. Mainstream media, I wouldn't believe it unless I see it for myself. Seems like at the very least CNBC has a very vested interest. So some people did not get notifications, some rockets and some paper clips. And someone said, K Richie says, I had to search for you today. Just looking here, most of you had your notifications, but some of you did not. Like JD Peralta did not get notification. Michael Henderson is throwing paper clips. Kitty is throwing paper clips here. Brody Wood. Okay, a lot more paper clips than rockets. Well, let's fight that algorithm. First things first, let's try to get to 1,000 likes on this video. And then the second thing is, yeah, we're just strategizing here because we need to be able to get the word out about this stock. So make sure that you've already liked this video and are talking in the live chat. You know, talk to each other. The chat rate also helps the algorithm. Okay, so let me see. Matthew Peralta also had to search for me. Oh, Brody Woods had have to search for the past few days. Oof. Okay, that's not good. Well, I'm slowly getting out of the shadow ban, but you guys should know that I did have to take Meatball to the vet yesterday, so I wasn't here at 6, but I will be here at 6 on a regular basis, 6:15 to 6:30. So please do know that that is on the radar for me. Okay, where did my live chat go? Okay, so we're gonna go back and talk real quick about any other tickers that you guys want to cover. So go ahead and throw your ticker symbols down in the description. Guilty Chibi, that's a pretty good username. Let's see, they're saying love the improvements to your channel, Andrew. Oh, I appreciate that, JD Peralta. Let's see. Watching from the UK, love the content. I appreciate that. Aw, Connor Cobb says just subbed. Be like Connor. He's a cool guy. Okay. I already covered Romeo, so RMO. Go check that out earlier in the description. Ocugen is blasting off. I did see that. Let's actually take a look at Ocugen. Here's another trade for Meatball for 800 likes. I'll give you 2 for 800 likes. Here you go. Do you want this? He's like, not sure. He's like, are you sure I can have it? Okay, so Oxygen is up 12%, which is crazy because it was only up 5% last time I looked at it. So it did break through this level of resistance here at 675. Exciting times for Oxygen. I would say right now that Oxygen is trading directly, being supported by this level of at $6. However, in the next point it's going to have trouble is it got rejected at 732. I wonder why that happened, because this is not a standard level of resistance for the last few days. Is this? No, this is only this is 760. And this is 726. So that's actually, if we draw a line here, that should have given it some pause. If you use the body of the candle, then yes. So as of right now, Oxygen does have to try and recontest that 722. If it does get supported by the VWAP is the big question. Can it be supported by this $6.83 figure? If it does and start to diverge from the MACD sharply, that could be a good opportunity for Oxygen to be able to rebound. Let's see. Remember, y'all, never buy more than you're willing to lose. This is the goal right there. CTRM. How about Naked? TH or XL? I haven't seen those yet. So TH. Target Hospitality. Some reason this makes me feel like this is not the right stock, but it is up 7.5%. Oh, it's on a breakaway that it's never been at before. This is the highest it's ever been at. Well then, first of all, congrats, but also be careful. This is a runaway stock, pure and simple, I think. Oh, actually, no. It was at $4.20 earlier today. So actually, it already finished correcting. So in that sense, the VWAP is actually trending significantly higher than what it is now. So it actually could recorrect back up. This actually might be a good entry point. So Target Hospitality, that is up to your risk tolerance. If you wanted to see the risk profile from yesterday, you could end up losing $1.80 and drop back down to its breakout at about 260, or pay attention to the VWAP, because right now, oftentimes we do not see this, right? This is from one spike, so the outlier of pushing the VWAP up higher from this one candle at 10 o'clock. Back to GameStop real quick, give it attention. Christopher Katsev says, just wanted to say that yesterday's content was exquisite. Don't know what I would have done with these crazy times without your informative and cool channel. Thank you, Christopher Katsev. You know what? We're gonna start putting little stickers on the walls again. These are really nice comments. I just wanted to be able to show off some of these comments. Oh, excuse me. Oh, hey. John Deek says, is it true you're being paid to be part of a Netflix documentary about GME and AMC? I'm not getting paid. Documentaries don't pay. These 3 documentaries are not paying. So that's the case. And also, I'm not. There's no guarantee that I'm going to be in the documentary, but I am talking about I at the same level as Matt and Uncle Bruce, I believe, have been all reached out, and Alexis Goldstein and Austin have all been reached out to by the same company. So they are going to work with us and see what kind of narrative is the best one to be able to tell. Sweet. I'm reading your comment, Illegal Monkey. I'm not sure about that. I'm not sure if the nationality of the company is the underlying factor. And crime scene, I'm reading your comment as well, but I don't know much about ASO, but it could be next on the chopping block. Tasty dip. Michelle Reese says, couldn't tune in last night. There was nothing last night. However, during the day, we did have the chance to talk to A. Tobit, the whistleblower that has now compiled that DD that you just read, and is planning on, with me, sending it off to congressmen, starting with the congressman that was on the show yesterday. Okay, so in that sense, let us do ASO. Oh, Trey, give me a shout out. Gorilla's in the chat for Trey. What a man. He's a beast. An absolute beast. Okay, AMC. Sarah Bostic. It was the Silicon Valley Congressman Ro Khanna. Andrew, good morning. You are my early AM, mid-afternoon, and late evening data analyst to trust every day. Thank you, Carnelito. Keep up the good work for our ape familia. Thank you, Discípulo del Éxito. I do appreciate that, man. Start aggregating some nice comments here. Okay. Okay, people are almost showing up. Almost 3,000 of you in here. Very cool. Emily says, I'll contact my congressman. Yeah, if you have a congressperson that wants to come on the show, Ro Khanna was the very first one. I'm sure that a couple of congresspeople, especially if they're up for re-election, that are likely going to be wanting to jump on this GME, stop the hedge funds kind of train. Because there's so many people that are ready and willing to watch on a regular basis every dang day to be able to actually fully capture what is going on here. Let's see. Jimmy saw a small bounce all the way down to 178.10. Then it was snatched up. People are willing to take up any dip right now for a GME. Rory Alton says, what's your favorite pizza takeaway? What does that mean? Matt Weiler. Let's go, Moon Platoon. I need some positive energy from the crew today. Come on, guys. Give Matt Weiler the positive energy you are looking for. Nemo Dur SOS. I did that earlier this live stream, so go ahead and check that out. I possibly will do it later as well. And Michael Davis says, it's a red day, good day to have dry powder, but a big hug for you and Meatball Hodl. This is temporary all around. Thank you, Michael Davis. John Deek says, can you say in a slow, deep voice, it's not bullish, it's bearish. It's not bullish, it's not bearish, it's gonna go ape. I can't say too many swears, otherwise Father YouTube is gonna be angry, but I'm gonna do it up to that word. It's not bullish. It's not bearish. It's ape. And then that's it. Oh, it's gonna go ape. Whoops, my bad. Tried. Homer Moon Hickam. I'm with Matt Weiler. Here's $5 for positivity. Let's go. Heck yeah. Let's do. So let's actually take a look at the option chain for today. Okay, so this is for GME. Ooh, okay, so this is a couple of plucky people excited to try to start build a gamma ramp up for us. It's all less than $1 million total, so this is not like a ton in the grand scheme of things, but something is starting to build for GME. A bunch of people want to see $200 strikes. AMC, on the other hand, battleground nonstop. So there are more. The strikes have the puts here by the cojones, but all the way up until $11 where the puts outmatch. However, this is all still under $200,000 each, so not a ton of options volume, not a ton of volumes in general. So walking like a duck, talking like a duck. Let me include that in the description. This person says, I've been scraping data used by hedge funds for over a year to make it freely available. Now that's cool. That is actually really cool. Volume in the gutter right now, seriously. Okay, so this person has been scraping data, and you know how much I love that. I've been scraping data used by hedge funds. Hold on. To make it freely available. So this is PDWP90 here, founder of Quiver Quantitative. Oh, so let's see how legit this company is. Whoa, cool website. Free cutting edge alternative data platform. Ooh, this is a good plug for his company, actually. Without further ado, in the inaugural alternative data report. Oh, shoot, okay. Net short volume off exchange. Oh, off exchange volume. Awesome. Wait, this is great. Trading by congressmen. Now that is the most important. That's one of the more interesting pieces. Trading by U.S. Senator trading performance. Wow, you can check by senator and see how their markets are doing. This is great data. Holy moly. Well, do you guys have a senator you guys want me to look at? This is very cool. So not everybody's on here, but Ted Cruz is on here. Ted Cruz is not doing great. It wasn't doing great a second ago for much of this year. So we're actually looking at U.S. Senator trading performance right here. With, if you guys are just joining, Tammy Duckworth. Oh, she's starting to decline. John Deek. I was watching AMC after hours and volume was like 40 mil. Soon as it went to pre-market, it dropped like in a blink of an eye to 2 mil. Is this normal? No. But what you could be seeing, is the difference of 40 mil for the previous day, because after hours, you know, it's like it's not as if the day is over yet, and then pre-market resets for the next day. They want to see Pelosi. All right. Pelosi. We got Peters. We got Perdue, Peters, and that's it. So I don't think every single senator is on here, especially since I don't think every senator trades. U.S. Senator trading sentiment alongside S&P 500. U.S. Senator sentiment plus the S&P 500. So this is a dual axis chart. Hold on. Oh, shoot. You can even see what they've bought. Filter by stock, GME. Oh, man. So the only one in on GME is Pat Toomey. Pat Toomey bought on the 27th and then sold on the 28th. I think he's entirely out then. So let's see what that would have looked like. So if you bought on the 27th, you would have been here on the 27th. Do I have a tooltip here about how high that was? Okay, so they had a high of 380, a low of 249. So this is basically right in the middle of the squeeze in January. And then the next day had a high of 483 and a low of 112. So it's unclear whether or not he sold for a profit or a loss. What do you guys think? Vote on your phones now. Do you think Pat Toomey sold at a profit or a loss? This is great data. Holy moly. This is fantastic, actually. Boy, do I love data. Ooh. So it's not like Pat Toomey is a diamond hander. We know that he's out. We know that he bought in the day, the 27th, and then sold the 28th. So at least he tried. He did something to the tune of somewhere between $1,000 to $15,000. Probably a smooth 10K. That's a gentleman's bet. Okay, so let's take a quick look here. GameStop's corporate Twitter account had a 0.17% gain in followers. Okay, that's terrible. Basically non-existent. And then a 6 in the last day, and then a 6.69% gain. Very nice in the last month. Okay, so that's decent. Off exchange. It depends on relatively how much do people change. Let's see. We know he paper-handed for sure. We just don't know if it's at a loss or not. Isn't that crazy? Wow. Toomey, a paper-handed fool. Oh no. People don't like Toomey now. Don't get political. I don't know anything about. We don't know if Toomey made money or lost money. But that's hilarious to think about, isn't it? Ugh. Let's see how Toomey's doing, actually. Toomey. Oh, so you can actually look at how he's doing back in. Oh, only in December, so you can't tell if he lost money back then. Ooh, okay. So once again, who do you guys want to? I'll display three. Which three senators do you want me to display for this recap video? I think Cruz and Duckworth are good ones up here, and then Joe Manchin. Oh, Joe Manchin's doing great. Mitch McConnell, also tying. For my GF Spa day. Oh, thank you, Valley Sparky 586 forever. Unfortunately, I'm not sure when spas are going to be open because of the whole pandemic thing, but I appreciate that. Okay. Wow. This is great. Let's get Mitch McConnell on here, actually, instead of Ted Cruz. Get Ted Cruz out of here. Wait, is Ted Cruz also purple? No, he's green. Oh, man. That means I have to get rid of Duckworth. Okay. It's like, do you have any more colors? Which senator is doing the best? Oh, it seems like Ron Wyden just started trading, or maybe he just became a senator. Maybe they just became a senator. That makes more sense. Bill Burr. Oh, this is Richard Burr. John Boozman. Okay, I'm having too much fun with that one. Okay, so let's go back here. So off-exchange activity, I think, is the most important piece that everyone is paying attention to here. Let's see. Getting political in the chat. That's what we like to avoid, ideally. But it does get the chat rate up. So as long as we keep it civil,
Let's see. Yesterday's off-exchange activity. Wow. This is a great heat map. It's percent of short volume off-exchange in the heat map, and then the size of the activity. Oh, cool. This is great. Is GME a big one? No, it's Apple and Tesla mostly, actually. Enter ticker. Oh, so this is the GME off-exchange activity site. With GameStop's Wikipedia page has been viewed 37,000 times this week, making it the 11th most viewed company page out of the 1,300 that he tracks. Wall Street bet discussion. This might ruffle some feathers, but he put precaution in ensuring the data is protected from the effects of manipulation and moderation. Oh, so this is like swaggy stocks. Let's see. Number of comments to the amount of sentiment. So the sentiment is mostly positive until the crash, in which case it becomes negative, which makes sense. And then it stays negative for a good amount of time. After the March squeeze, though, everyone started to get really positive about it again, even though it dipped. So this is the interesting thing, right? People were excited for the possibility until it crashed. And then it actually, you can think about sentiment as kind of like a ticker in this situation, because this ticker here, it gives it the opportunity to be able to like see the growth of the stock, like not be able to go back to its former glory of almost completely positive sentiment. And then it has a major new resurgence. So it is actually on a rip in terms of sentiment here. Most mentioned last 24 hours. So ASO, ASO has been like the winner for a long time. Let's talk about ASO, of course, in just a second. And now GME has just pushed up in April 2021. Also, this is all of it. Wait, this is just the last 24 hours. Oh, great. Understanding data. Fantastic. Electric vehicles, cannabis, betting, crypto. Okay, these are the 4 that we usually talk about anyway. Short activity. I bet most of this is just Tesla, though. Most of this is Tesla. Some of them it might be CCIV. This is great data. Ooh, man, I love data. Okay, insider trading. It means trading reported by company insiders, not the illegal trading. Over the last 6 months, GameStop's directors and management have bought 3 million shares of GME and sold 250,000. Insider trading. Oh, wait. Correlation between daily price changes and presidential candidate general election betting odds calculated. What? Joe, what? This is a perfect negative correlation? That's kind of sus. Insider trading here doesn't have any more data. Senate trading. Oh, look. In 2017, Tammy Duckworth sold some GME. Where did she get this GME? Did she work for GME? And then Sheldon Whitehouse also sold GME in 2016. But where did they get this? Where did they get this GME? If they have never, if we don't have any data about when they bought it. So let's see, Twitter. Oh, this is basically everything for GME. Great. Oh, house trading. Oh, we do have house trading. So nobody has bought in the house yet. Greg Gianforte and Gary Palmer. This is great. This is very cool. All right, let's get this video out there. Number of mentions in GME by WallStreetBets. Oh, look at when it was back to the thousands over here. 6,000 times. Must have been like on the quintuple digits back in... No, really? 8,000 times. 18, there we go, quintuple digits here. So 18,000 times back during the January squeeze. This is great data. Holy moly. Okay, we're going to cover this real quick as a quick recap, and then allow us to re-look at the ticker symbols that we already saw. Ron Wyden is a senator from Oregon. He has been there for almost his entire life. Your entire life. He has also been in the Senate Intelligence Committee. Thank you. Okay. Okay, so what I'm going to do is I'm going to go through this video real quick, and then if you guys have ticker symbol suggestions, let me know. Otherwise, we're going to go and build out a little bit more of the puzzle here. One sec. Okay, so I've been scraping data used by hedge funds over the years, so let's give this a quick shot. Holy data, Batman, we actually have an opportunity to make some pretty good change. We are going to cover this very briefly, but this is data that we are being provided by user PDWP90. So if you guys are not aware of who this person is, they are the founder of Quiver Quantitative. There's no relation to this channel or this video, but he is going to try and provide you some of this data that he's been scraping for over a year to make it freely available to everyone. And now let's just give a quick overview of the dashboard here. We have ridiculous amounts of information that we can walk through just for GME, right? You can do this for almost any single ticker, and I'm going to leave this in the description down below, but you can take a look at all of these different metrics for different tickers, like political beta. We have insider trading, we have Senate trading, so looking at the publicly available data that the senators have done before. One of the more interesting pieces is that we have only one senator that has purchased during the RIP, the January squeeze. And if we look over at GameStop, Pat Toomey bought GameStop at on January 27th. So let's look at 27th. We have it's right above my head in tiny green text, but a low of 249 and a high of 380. So you could have bought anywhere between that $140 range. But then the next day, where he sold on the 28th, had a high of 483. So you could have been making some mad bank, or a low of 112. So either way, he paper-handed. But did he make a profit or did he make a loss? Drop what you think in the comments down below, because that's a very funny fact that Pat Toomey is the only congressman that bought in during the squeeze. Let's see whether or not he turned a profit on that. We also have Twitter sentiment down here. So this is just, Twitter volume of exactly how many mentions we have on Twitter. As it turns out, January was not the peak of it. People just keep talking about GameStop nonstop, and it has actually peaked around in April. And then there's also followers on the company's Twitter account by day. So if you go all the way back down to pre-2021, there was only 24,000 followers. You can actually go up and track how many of those 6,000 followers actually started joining because of this craze. And then finally, about how often is it mentioned on Wall Street Bets. So speaking of Wall Street Bets, we know that Swaggy Stocks is one of the best indicators that we use to be able to actually tell us about the sentiment analysis for GME. So we can use Swaggy Stocks in conjunction here. Let's look at GME briefly. Swaggy Stocks only gives us the last 30 days. So we see GME sentiment tracking downward in relation to the price. However, this is actually a slightly different narrative than Quiver Quantitative tells. So here is the sentiment for GME on Wall Street Bets as a relation to the price. As a relation to the comments on it. So the number of comments here is the bar graph, and the way of sentiment here, right? We have a lot of people in January during the squeeze lose their sentiment entirely over the amount of negative sentiment, and the comments down here dropping the sentiment from about 0.64 out of 1 down to 0.42. This is kind of like getting a 6-star rating down to a 4-star rating in terms of just how positive you speak of the stock, and then seeing a small rise actually in March that then petered out when the second gamma squeeze happened in the middle of March, and now it is currently actually on a rebound. So will the sentiment for GME rip? Let us continue finding out. Thank you, Henry Schubert, for joining the Mo Monkey gang. And we can even trend it based on the most mentions for other stocks in the last 24 hours. ASO is slowly coming up, and GME is once again taking the lead, but ASO was on the hotspot. So we're going to do an analysis of it quick. If you guys have not seen analyses done live on this channel, it's a good way to join the channel and get started. If you guys have not yet done so, it's a really good way to be able to learn bell to bell the analysis tricks that I do as a data scientist here. Thank you for the coffee. Hector with the coffee in the morning. Oh, that's great. So once again, there's a lot of information here, especially industry baskets, right? We can talk a lot about EVs, cannabis, betting, and crypto on this show. We also have short activity based on here. And I think the most important data that we have to offer here is, let me go here, off-exchange activity, right? Off-exchange activity. This is data that isn't easily seen and but it is publicly available on Finra. So this is something that we've seen before, right? There are both dark pool and non-dark pool, ATS and non-ATS off-exchange activities. Here we are seeing that yesterday 5 million shares of GME were traded off-exchange, and 2.5 million of those shares were sold short, giving GME a DPI of approximately 0.48. Below is a graph of cumulative net off-exchange short volume since 2010. So we are looking at closer to when as it goes higher and higher, right? We have net OTC short volume in the 200 millions in the middle of 2020. And now that 2021 has come around, we are seeing a gradual rise of off-exchange short volume, which once again explains where all that short volume is coming from. Where are all these shorts coming from that we cannot see? When we have GME have less than 6 million volume on the day on the normal exchanges, this is where 5 million, almost 100% of the volume that we saw on the light exchanges in the off exchanges here. So if you guys like that data, please do check it out in the description down below. And once again, data is king. So if you guys want to continue following on this channel and learning with us, we're going to be diving through some of this data, looking at your favorite congressman. That is a fun one. You can look at your senators and your the trading performance of your senators, not based on GME or anything, but just look at how Ted Cruz is a little bit like wibbly wobbly, and then for example, Pat Toomey, the one that bought in on GME and then paper-handed. We don't see his January performance, but it seems like he's a pretty stable investor. Interesting that he decided to go in on GME. Maybe this is once in a lifetime opportunity for him to try to jump in. And then finally, we have people like Mitch McConnell having a declining portfolio. So maybe he's invested in old money, and now the old money that is probably in like pandemic non-resistant stocks are now trending downwards. If you wanted to compare your own portfolio with these senators or congressmen, this is a great way to be able to check it out as well. So once again, thank you guys. Big praise to these people that make the show possible, because they pressed the join button or went down to the Patreon link and supported me there. And we'll see all of you in the money. Peace. Okay, that was really cool. I think that was fun data. So that is that source. Okay. Mods are doing good work right now. Interrobang says, oh, I love Interrobang. That's a really good username. Okay, let's keep learning. Okay, we had a couple of politics talk earlier, but now it's all done. So we are gonna say goodbye to Quiver Quant. Very cool to have that level of transparency, though. So DTC form to confirm possession of shares. Let's go over here. We try to cover that article, but honestly, it's not great. There is one that says how to read a Bloomberg terminal, but I feel like we already read a bunch of DDs, so let's actually go back to the stocks. So if you guys have any ticker symbol suggestions, let me know. Because this is an opportunity for us to talk about the stocks we love, but also with data. Give us the data that we love as well. There's a rumor that GME is selling 3.5 million shares on Yahoo. Are they creating more FUD? That wasn't a rumor. That was real. That's what caused the dip in the in morning. So, but then it was a flash sale that ridiculously quickly got caught back up and went back to its normal levels before it fell. So once again, understand that they want the option to sell 3.5 million. I'm putting out a whole video today. Y'all better watch it because I'm gonna stop here. I'm gonna stop doing premieres because some of you are getting real confused about when I premiere and when I'm live stream. So from now on, when I live stream, I'm gonna be live. So no more premieres. Hopefully that makes you guys a little bit happier. It generally was supposed to be like a new feature for YouTube to be able to push content and allow more apes to see it. But as of right now, too many apes got confused because I do a lot of live streams as well. So that's totally understandable. Not going to do any more premieres. So only live streams and regular videos. DTC form to confirm possession. So what I want to do is actually listen to my audio to see how I sound. For YouTube to be able to push content and allow more apes to... That sounds good. Sundial. So people want to look at Sundial. Someone let's look at MMAT. Okay, fine. Let's take one more look at... so let's look at ASO, and then we can look at MMAT. Academy Sports Outdoors Inc. Did something crazy happen? A day ago, top-ranked momentum stocks. Oh. Can it continue? VZ DeVirus, thank you so much for joining as a Moon Platoon member. You are an officer of the Meatball Army now, and Meatball is happy to have you. He's just sleeping on the ground over here. Go ahead, Meatball, go. Good boy. We're seeing GME run a 5-step, 5-step corrective wave, which means that we're likely going to see a bounce coming in soon. This is an indicator that either consolidation or an impulse wave is up next, like a roller coaster. So be careful. Am I using StreamYard? No, I'm using OBS. So guys, as something to note, we actually have brand new calls. Let me check this. We have brand new calls of $2 million roughly, deep out of the money, $440 and $500. GameStop has never been at $440 or $500. Actually, they've been close. But as of right now, GameStop would have to pull some crazy strings to be able to push that far. However, this gamma ramp that I'm seeing here, I like it a lot. 185 leading all the way up to 200. That's the bounce that we are likely going to be able to see. This is a very small gamma ramp compared to everything else that we've seen earlier, but that's because finally they've stopped the cyclical hiding their FTDs deep in the money calls. So at this rate, we can actually just start seeing everything relatively big again. Drake Boat, I'm still gonna drop snips, but I'm not gonna drop them as premieres. I'm gonna just drop them as regular videos. Here you go, bud. Here you go, bud. So I don't think I'm shadow banned. I think I just need to be better at switching topics. So let me know if you guys switch off the video because I talk too much about AMC or GME, or it's because I don't look at other charts, because I see that people don't get happy either way, and I would rather stick to one thing anyway. So let me know. AMC is on this 1, 2, 3, 4, 5, 6, 7 part corrective wave. Has GME beat just by a hair in terms of its correction just now, rejected by the VWAP, so it is currently trending back down to the 995 level of support that it has been supported by all morning. Let's see if it actually can sustain that. Can someone, yeah, someone confirm if Ralph actually paper-handed, because I can't go by rumors. Cody Cooper, thank you for joining as a Mo Monkey. I do appreciate that. You joined as a Mo Monkey, and it's time to feed the meatball. Dre Lab says, ooh, ah, ooh, ah, 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 ah. You can't please everyone. You've been doing a great job covering what you have been. Don't stop your audience. Don't stop your audience's growing. Thank you. I appreciate that. I just wanted to read a little bit of your feedback here. I like DD, says Douglas Nord. I like DD as well. Cody Cooper says, love your channel. Thank you, Cody. Okay, cool. Pew, thanks. I like how Drake says pew. Okay, so let's actually, I want to be able to look at our GME one more time. Maybe it's not just memes this time, but probably is just memes. And Super Stonk as well. Diamond Hands is no longer about taking advantage of an opportunity. It's not about wealth distribution. It's not even about saving a company anymore. This post clearly shows this has become much more than that. It's now becoming about exposing and destroying one of the most corrupt financial network systems in the world. If you guys saw that video that I explained the 3 camps of GME's mind, you really break it down to people who want to make lots of money, people who want to help GME, and people who are like this guy over here. This guy who is trying to make like an Occupy Wall Street 2 sort of situation. All 3 are fine. All 3 are fine, but that's why you have to understand there are 3 camps of the people actually trying to make this squeeze happen. Oh, and Nathan says take a look at Amazon. I do have some Amazon, so I'd like to look at Amazon. Oh. Up 1.5%. Exciting. It's on a bit of a rip though. I remember buying all the way back in March. So March of last year. So let's see. Do the daily. So back in March of 2020, it was at, yeah, I think I'm up 100%. I think I'm up 100% on Amazon. That's a good, you know, when there's a flash sale, you got to take advantage of it. Yeah, it was at 17 bucks, 1700. So now it's at 3200. I'm up 100% on Amazon. Feels good. Let's see, 5 million volume at 225 Eastern. My message. Yep, doesn't seem like there's anything here anymore. I would launch an official consultation about GME at my bank, but they refused because GME is irrelevant. Uh-oh. Day 71. Okay, Michael Burry's message. Let's go to Michael Burry because I believe his Twitter account was deleted. What are they trying to do? The same thing they did back in 2008. That's the thing. They're really trying. We've already covered like the evidence. Every other piece of like crazy speculative DD is not necessary. We've already covered the evidence of how they're using rehypothecation and repurchase agreements to do the exact same thing they did back in 2008. It's not really much of a question anymore after this. It's just how many Congress people can we get on board with the 6 bullet points that we will be writing today on stream with Mason. Get excited for that. Super stonk. Raise your hand if you want to hold one truth or one stonk forever. Why there is no volume? Okay, if you guys have ticker symbol suggestions, we are going to do ASO and then MMAT. Oh, that's pretty good. Ooh, petition to have DFV do an AMA on our Superstock. Is he going to be safe, though? Will he be safe? I don't think he'll be talking to anyone anytime soon. I agree. I reached out to him. Why wouldn't he want to talk to me? Why there is no volume? Someone is keeping this rocket from rocketing outer space. We've already talked about that low volume is actually good for IV. So that is not, so trading sideways is actually not a terrible thing. One of the most important pieces is currently, the more we trade sideways, the more the gamma rocket can fuel up. And that is a quick reminder of what we are currently waiting for. Okay, I'm afraid so can I show Bloomberg terminals? Can anyone confirm? Because I would like to read how to see a how to read a Bloomberg terminal, but I'm not sure if I can. Ralph really did sell. Oh no, Ralph. That's okay. I mean, it's his choice. Don't fight ape. Apes don't fight apes, guys. Come on. Give Ralph the time of day. Donald Lyle. What's your thoughts on ATNF? Are they still heavily shorted? Sure, let's take a look. Apes do not fight apes. ATNF. 180 life sciences. Weird. Are they suspended? No, they're just perfectly at 708 where they closed yesterday. 5-minute chart. Pretty sideways. Small impulse in the pre-market every day. But slowly ascending level of resistance and support here. So from 593 to $7 in the course of 7 days. 1, 2, 3, 4, 5, 6, 7 days. Breakout. Yeah, about $6. It's $1 rise in 7 days. And as of right now, I would say that it's possibly trying to consolidate in an upward trend to be able to try and retake this level of, I would say the strongest level here is $10, right? And then the wick past this in the pre-market is actually an outlier. In my opinion, ATNF has a strong case for gradual growth. But let's see if we can figure out why that blew up here. R&D pioneers. Is this the 23andMe company or no? No, I don't think so. I'm trying to figure out if which one of those is the SPAC. Okay. So there are technical levels to watch here. Yeah, $10. Thought so. Okay, so I said $10 is a level to watch. They're saying 7. So 7 currently is where it is trending. I don't see how it was resisted at 7. I think the resistance actually is 755 here, because it's a triple top right here. So if it can push past 755, that's a good entry point, because you know that if it strongly pushes past 755, that's a good entry point. Otherwise, if it gets resisted at 755 and drops back down, that would be the worst entry point possible. James Allison, if right now Patreon is not connected with YouTube, so I need to work with my head mod to get Zapier to see if it's even possible to connect to Patreon with YouTube. But James, hang on tight. Geez, GME passed its resistance. So let's remind ourselves what resistance and support is, right? Support is where stocks bounce off from. And right now, there actually aren't any strong levels of support between 180 and 171. Let's see the last time that GME actually was resisted or supported here. Maybe here, 176. No, that's 3 touch points there. Yeah, these are all wicks though, not bodies. So this is why it's hard to tell. Yeah, a little bit. So there's really not a lot of movement here between 180 and 171. There's not a lot of resistance because they oftentimes just push straight through. So as of right now, GameStop has the pattern of being able to start a consolidation phase, which it looks like it's already starting. It looks like it's already tapped down and started an ascending level. If it gets recovered here and pushes past this 177 level, then it should be able to recontest the VWAP, which is what we're waiting for that bounce. AMC, on the other hand, is at the end of this very long, very clear, articulate corrective wave. You can see each of the subwaves basically the exact same length and the exact same predictable pattern. So that's something great for AMC if we are able to use this as a prediction for how it's going to be supported solidly at 995, which it was earlier this morning, and then bounce off from here. So both of these are preparing for a bounce. Let's see. Here you go, bud. Maybe the threats were too much. Oh no. Okay, so let me go back and look at the DTC form here. So there's a new updated form by the DTCC. This is going to be brief. Too long didn't read. If they don't have the share, they are charged 130% if it's related to a short position of the value of the share every Friday at 4 p.m. EST. If they can't validate that they have the share, they have to pay up big. Imagine 130% of 200 every day times 1 billion, for example. So they will likely be a massive buying frenzy of GME to account for their shares. And yeah, mother of all short squeezes, this is big. Apes, I'm being told that's nothing to do with shares or GME. Please, I might delete this post. I do not become overhyped. Okay, let's delete this post. That's let me go to the too long didn't read and the comment section and the edit post first. Let's see. Another one from PDWP90. Okay, so this is the same guy that we saw with Quiver Quantitative or Analytics or whatever they call it. And this is a dashboard that tracks congressman returns to see who's a fellow member of WallStreetBets and who's actually making money. So let's take a look. Senate stock trading versus S&P 500. So we saw this chart a few seconds ago. Honorable mention. Former Representative Barbara Comstock. She lost her 2018 re-election bid. She didn't think it was necessary to think that she was a Wall Street bettor. She bought $75,000 worth of Micron Technology stock back at $625, just days before the first stretch in the years where the stock wasn't literally printing money. MU lost half its value in the next 6 months and still hasn't recovered to the price that she purchased it at. Okay, so this is actually really cool. This is basically which senators are apes, and so which of them actually bought into stocks that are considered Wall Street bet stocks. That's actually a really cool post. Let's actually give it a quick look. Man, I wish I was able to push this with the other one. Oh, James Allison, now you've gone and done it. Oh, thank you, man. Thank you for joining as a general of the Moon Platoon. I know you already were, but now you're a double general. You get 2 general hats, and I guess you're the general of the generals. And until someone else supports the show, both on Patreon and on YouTube membership, you're the only one. So I salute you. Thank you so much. Let's see. AMC just hugging that level of support here before we talk about which of these congressmen are actually apes. This sucks because now I kind of have to do the other video again, which I think is fine. Oh, but these two are different. Why are they different? The formatting is different. Great. Thank you. Okay, it's not worth it. Not worth it. I tried. Anyway, this is just a fun little pick-me-up before we go back to stocks. So we have Representative Alan Lowenthal is more successful traders on this list, having gotten into GLD in September of 2019. He also timed his exit from SPCE pretty well, selling about half his position down in the mid-February peak. So they'd say Lowenthal just lurks the sub looking for opportunities to inverse Wall Street bets. Okay. Josh Gadamer says the Josh Gadamer story is a story of perseverance and diamond hands. He's pretty sure that this guy reads some DD on here and says that Snap was going to the moon after its IPO because he bought into the stock just days after it went public. He caught the falling knife right on his tip as his position lost 75% of its value over the next couple years. A lesser man would have cut the loss, but Gadamer, he just kept buying up more Snap as he was losing money. Those of you who have an eye on the markets will know that his grit and determination was handsomely rewarded in the last couple months. Yeah, Snap was a comeback story. Holy moly. Let's see. Senator Pat Roberts, Kansas. His favorite meme stocks are Tesla, GLD, Nvidia, and GE. We know none of these are going to be GME. Oh, actually, wait. Sheldon Whitehouse. Oh, at the very bottom. Okay, one sec. Pat Roberts is another guy that I think comes here to inverse the sub. Roberts made an impeccably well-timed Tesla play a few months ago when he bought in at August 3rd, just a few days before the August run-up began, and then sold on September 1st, just before the early September drop. Insider trading or inversing Wall Street bets? You decide. Is he a criminal or is he just reading Reddit? You decide. Wall Street Bets must be big in Kansas because the next big guy was also Kansas? Yeah, it's also Kansas. Next guy. Next Kansas. Marshall got a big promotion to Senate a few days ago, but if that didn't work, he would have probably just switched to day trading full-time. He was already day trading JNUG within a few months of entering office, buying and then selling thousands of dollars worth of stock between market open and close. What Marshall really lacks is patience, as he recently entered, then prematurely exited a position in Roku in mid-September, missing out on big gains in the weeks to follow. Remember, patience, ladies and gentlemen. This is what we should learn from this story. The Sheldon Whitehouse, Rhode Island senator. The story of Sheldon Whitehouse is not a happy story, but it's a story that may be told by a member of the community. He had the right ideas, but just didn't have strong enough hands to see them through. On 2017, Whitehouse entered a position in Tesla, seeing a modest 3% gain through the month of August. He doubled down his position on August 24th. Although he soon began to lose money as Tesla sank, and Elon, he still trusted. He bought more Tesla yet again in December 2018. Sadly for Whitehouse, we now reach the heartbreaking part of the story. Seeing a 30% loss on his investments, he lost faith and sold the entirety of his position on 2019. He sold within weeks of what would have been a year-long run-up, 1,000%. Oh no! Even that was heart-wrenching. Even senators can lose money. Wow, that was sad. Do you guys feel sad? I don't. I'm over it. These guys are senators. They're gonna be fine. They're gonna be okay. Okay, so back to the options chain real quick. We see, I think this is the God pill. This looks like Marcus putting another $20,000 on $800 strikes at the very, very far out of the money calls for GME. Christian C Music, why are they taking so long to cover? It's because, well, actually, it's not going to be long now, right? Because they no longer can do the cyclicality FTDs now. Let's say that, let's think about the ticking time clock. Okay, the way that the FTDs used to work is T minus 1 and T minus 2, and for certain organizations you can have T plus 2, so T plus 4, right? So you could have 4 days to be able to find the the shares that you naked shorted. And there are other stories, right? We've already read DD that the numbers that T plus 6 and T plus like 14, T plus 7, right? They're all not accurate because they are based on provisions that have expired in like 2018 or something. So as of right now, they really do only have 4 days, right? And so the question is whether 801 was like, sorry, not 801, 005. So DTCC 005 was the thing that basically said you cannot do cyclical trading of FTEs anymore. Now they're just going to expire, right? Let's say that you are a Citadel. I'm surprised people haven't been talking about this because there's a timeline here. We have 4 days max since April 1st, so 4 business days. So yesterday was the first one, today's the second one, and so we have 2 more days possibly before 005 basically makes it impossible for Melv and Citadel to trade their favorite Pokemon cards. By which I mean I'm talking about their inability to be able to trade FTDs back and forth. Right? We talked about how they were using deep in the money calls, but now 005 does not allow them to do that anymore. And so these are cut off, but these FTDs still exist. It's not like they can just suddenly locate shares. So they no longer have the ability to trade FTDs between each other anymore. This is where we are looking at the timeline. In 2 days, they're going to have to find some other way to be able to hide the FTDs. Now, that said, there could be something we're missing. Always take it with a big caveat. However, with the DD that we understand, I'm surprised nobody's talking about the fact that these FTDs do need to find another way to reuse, reduce, and recycle other than the way that they've been using before. Tacos in the chat because I'm hungry. It's almost lunchtime, says Ethereal Toad. Tacos in the chat because I'm hungry. I like that attitude. I wish I was also tacos in the chat because I'm hungry. Coffee is keeping me sated. Coffee, an appetite suppressor. Oh man, South Carolina says, get this guy to at least 2,000 likes. I'd appreciate that. Thank you, South Carolina R. And so yeah, I hope that answers your question. Why is it taking so long? In my opinion, it might actually take much less time than we are expecting. But let's try and stay optimistic with a big grain of salt. So this is once again because we confirmed we've been watching the option chain nonstop, but the hedgies did not buy deep in the money calls today. I don't agree for the first time. This is an important distinction. We've been watching the options chain. They've only started to do this like a week and a half ago. And we know because that was big news. We were like, what are all these in the option calls? In the money calls. And we figured them out. Okay, so what I'm going to do now is to open it up again to whatever kinds of... Cody Becker says, I should find a D&D themed bordered whiteboard. Ooh, that'd be good. Anybody has any ticker symbol suggestions? Let's go through them. Sarah Squeezy Please says, are all the rules passed now? No, 801. So this is the reason why 005 could be bigger than 801, because they're actually not related. 801 is building off of 003 and 004. Essentially, whatever 003... if you lie to us, we will find you and you will be in trouble. And 004, we will scatter your remains and everybody else is going to be in trouble too if you get in trouble, even the innocent ones. And then 005 is completely different. It's like you cannot use the cyclical FTD hiding your shenanigans anymore. And so that actually is a very important catalyst based on our understanding of the FTDs. That said, if our understanding of the FTDs is actually just one tool in their tool belt, that's a different story entirely. Slap that like, says Kaz Fox. AZFLGTIM. Once again, at 2,000 likes, I'm gonna juggle. What am I gonna juggle? I'm gonna juggle these emojis behind me at 2,000 likes. So there you go. That's something fun to look forward to. Boop, 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 boop. Okay, I see people that want MNKD. I already did SOS, but for the people who keep asking, I'm gonna just reiterate what I said earlier. MNKD. So what I said earlier, before, right when markets were opening, was that this likely was going to, what did I say? I put this resistance here, and I saw this red candle early, and I said when this red candle bounces off of this would be a strong entry point. Yeah, that's what I said. Okay, good. 528 would be a strong entry point. Hopefully you bought in, because now it's back. But once again, now that it is this much higher over its VWAP again, it is now in uncharted territory. However, you see that this MACD down here on 30-minute chart is still underneath the signal line. So it is not a fantastic time to jump in until that MACD starts to push even higher, sharply into that signal line. That would be the best way to go. Timothy John says, support my spine. If you guys haven't seen that Spine Care affiliate link in the description, I'm still waiting for mine. I need to get that Spine Care stat. Brittany says, I love you, Andrew. Thank you, Brittany. This is the way. CHPT thoughts. Okay, let's do CHPT. Charge point. Ooh, look at that cup and handle. So that cup may or may not be legitimate because cups usually have to span a certain amount of time. And handles are also normally somewhere between 4 days to 4 weeks, and these cups can span like months. So this is only a day's worth of data. Not likely. This is actually more likely a double top. So if this is a double top, you will see it soon as this stock can, if it does reach its EMA, which is $2 away. If it reaches its 200-day EMA and it continues to fall underneath, this is confirmed double top, which means this is a bad stock to be in right now. This is a bearish pattern to be sure. It's the opposite of a George W, and it allows you to say, uh-oh, charge point. You may not be the point for me to charge right now. I don't see an excellent entry point right now for it, and I have no idea how much of this drop is going to be reflected based on this rip from a couple days ago. You could end up losing up to 30% because the breakout was 30% down at $20. FREQ, okay. Oh, here it comes. Here comes that bounce. Come on, G. Oh, here comes the bounce. Predicted. Stocks are easy. Here comes that bounce. Okay. After a long period of pretty natural paper handing, maybe a little bit of manipulation, both AMC and GME are back to bouncing. Let's see how long this lasts. Ah, man, I just get excited about stocks, guys. Chef Pew Pew, what's going on here? Good morning, Andrew. It's time to take that weekly peaky weeky at my girl FREQ. Headed back to 30. It's still not too late. In at 8:44. Perfect timing, because I was just going to look at FREQ. 20%. What? Huh. Oh, shoot. This is actually a pretty interesting narrative. So once again, we've seen FREQ fall past $36, and it's just been trending down for the last few days. It's just been nonstop sideways movement. Even on the 30-minute chart, there's just barely any movement at all. And now there it goes. I can't say this is a runaway stock because it was worth 200% more. What is this? 2 weeks ago. So FREQ, there's no patterns, there's no momentum to actually look at. So let's actually look at, for one, the RSI, way greater than 70, and it's been sustained all morning above 70. So this is a overbought territory. Be careful. Do not rock the boat. We also are looking at the VWAP. This is being supported by volume, unlike other times where GME, for example, right? You see this small rise. The VWAP just basically yawns and says whatever. This VWAP actually is being fully supporting this rip here, which is actually a sign of healthy growth. We also see that the MACD is starting to taper off in terms of its bullishness, right? We see that if it's like a sinusoidal instead of like a sharp linear line, if it starts to dip like that, that means that we are starting to see that this line is starting to lose momentum. You're likely going to peter out around this 1291 where you were rejected. So FREQ currently beautiful rip, but if you are planning on entering, probably not a great entry point right now. The to make it a good entry point, you need the RSI to calm down and start trending below 70. Likely you're going to see a small subwave downward. And then if we can get both the RSI and the volume to, both the RSI to go below 70, but the volume to stay high, you will likely be able to see another rip of this size. And this is from 10 to 12 bucks. You might see another $2 increase by the end of day if all those conditions are in the right place. Okay. Oh man. Funny how hedges have to monitor the price every second, yet I'm holding while looking at RuneScape. Heck yeah. All Boogie says Austin went a little too hard in the interview. You could tell by the body language and tone of the congressman after Austin's rant, he lost credibility. All Boogie, I want to say that Austin was great. I could tell the congressman was uncomfortable. I'm not sure if we lost credibility, but at the very least, he started taking us more seriously in a different way. Right? He was coming on all jovial, and then as soon as we started saying we have evidence, we have proof, you could be interpreted both ways, right? He could be like, oh no, these guys have proof and now I have to read it, or oh no, these guys have proof and now I'm gonna have to read it. So that's the two different ways you can interpret that. Andrew, have you tried to ask Ken Griffin for an interview? Why would I want to have Kenny G on this show? He's just gonna show me his OnlyFans. Kenny G, honestly, if you're Kenny G watching this right now, or you work for Kenny G and you monitor my live stream all day, first of all, thank you for watching this show. Make sure to smash that like button. Second of all, please tell your boss that he is welcome to come on the show anytime. This is an open offer for Kenneth Griffin, CEO of Citadel. And same goes for you, Gabe Plotkin. Both of you are welcome to come on the show at any time. Shoot me a message at andrewmobusiness@gmail.com. Okie dokie dokie doke. Okay. Oh yes. Okay, so Austin has already started adding GME bullet points. This is great. Oh no, he needs access. Why does he not have access? Now he has access. So he's going to start working on that. And remember, we have Mason coming on the show later today at Power Hour, and he is going to tell us how to talk to a congressman, basically. Like, exactly how does a congressman want to be talked to, essentially. All right, let's look at Virgin Galactic, SPCE. It's like you're the universe and I'm the SPCE. Uh-oh. SPC is down 5% today. This is mirroring the exact same downtrend as the one from Friday. Is this Friday? No, sorry, today's already Wednesday. Oh my goodness, from Monday. So this is a parallel drop. Likely you're gonna, if it's a parallel drop, you're likely gonna see the exact same level of support here. It's been supported multiple times a couple of days ago. Actually, it was not a strong support because it was crashed through over on the 30th. So take that with a grain of salt. But it was supported on Monday, and that is where we're currently looking for SPCE as an entry point. If you wanted to enter, you're likely going to have to crash all the way down to 28 bucks before it actually goes back up. If you're looking for it to go back up earlier, check the MACD, of course, and the RSI is actually starting to dip below 30 already, which is a good sign of being oversold. Cody Becker says, get Jim Cramer. I think I'm 100% going to be in trouble if I get Jim Cramer on the show. Let's see. Okay. But once again, I'm sorry if it came off wrong, but I love Austin. He and I are actually like good friends now. We feel like little researchers together. And his the work that he's already done is unparalleled. So I think his intensity can be tempered with more, I don't want to say like pleasantries, but those are both important pieces when it comes to talking to these busy people who don't need to listen to you, even though it's their job, right, to work for us. But they don't need to listen to you because they have thousands of people. And some of those people are companies that they would like to listen to. And the thing about Ro Khanna is that he is one of the least bought politicians that exist, especially since he's my he's my congressman. I'm super excited for that, for how he is going to take this news. And if he ends up giving us a recommendation to other Congress people, can you imagine that? That would be huge. Pop, pop. I would agree Kramer will be interesting, but it definitely won't be good. It won't be good for the show. It won't be good because it's like someone said, it will be given an outlet to spread FUD. 100%. I'm just gonna have to like have my hand on the mute button the whole time and be like, and if he starts spreading FUD, I just have to be like, well, thank you, Jim Cramer. Meatball needs a treat. Mr. Corgo, thank you for giving Meatball a treat. There you go, bud. Okay, AGC. So I did ASO already. Let's do it real quick. I think I did ASO already. What did I say? Did I say about 25? So ASO had a breakout earlier in the end of March. Actually, in the beginning of April, from 26 bucks. So this $26 gave ASO a little bit of trouble, but then this ascending channel started growing. So an ascending level of the support and resistance, moving on up to a new resistance of $34, right? Then it's starting to trade sideways right between. This is actually a pretty predictable level of correction after a strong impulse. If this is the end of this corrective wave, you will probably know based on how the RSI performs right in smack dab between 70 and 30. If the RSI stays there and the MACD also has an opportunity to start pushing sharply against the signal line, you should be able to see a resurgence here, because this looks like one correction after a strong impulse. If you have another impulse this size, you're likely going to go another $7. Actually, this is a full $10. I would say you're starting here. So you could likely go another $7 from $31. That's a $38 price prediction. I'm not sure about the timeline, but depending on how long this this goes for, hold on. Depending on how long this correction and consolidation goes for, you could likely see. This is not what I wanted to do. Okay, I'm not going to draw anything here. Maybe I will. I'll just draw this like that, up to 38. See if that comes true. Kyle Cooper says, I saw the struggle as you two have a ton of information that you had to communicate to the senator who had no knowledge in 20 minutes and no script. I think at one point he started taking down notes, and I'm just like, oh, we got to slow down now, because I'm not sure, because if I take down notes, I'm 100% forgetting what you said earlier. Like if you talk faster than like 20 words a minute. You want me to get the president of the United States in here? Maybe. Wouldn't that be cool? You miss 100% of the shots you don't take. Come at me, POTUS. Let's see. Okay, I don't think he was completely lost, but I think he started off in the wrong context, because we started talking about people, we started talking about like exposing cheaters, and he was like, yeah, my Cheaters Act, which is about like taxes. And then, so that was, the first 5 minutes was confusing. So supposedly nobody briefed him on the show, that is a GME show. I also don't have the ability to contact him directly, because I have to speak through aides. So that's why I have no idea how much the aides talked to him about the context. Charlton Breezy says, watched the stream yesterday and have to say, Andrew, the way you two spoke and what you brought forward to congressmen was moving. I hope this brings more attention, powerful eyes onto our situation. Keep being yourself. Charlton, that's a good name, by the way. Charlton, as a reminder, we are constantly building bigger and bigger mountains to climb. And we are actually going to take those 6 bullet points that we make with Mason today in the Power Hour and start moving in the right direction here. Charlton, another super. Thank you, Charlton. Okay, let me actually talk to... Let me actually look at Austin and say, hey, Mason, I have caps lock on. Oops. Hey, Mason is joining the show at noon to work on the bullet points. You're free to join. PST. Okay. Alexa Goldstein. She thinks it's Goliath versus Goliath? Oh. Uh-oh. Let's give her a platform here. Once again, she was comfortable to come on the show, but she's waiting for all the drama and harassing to die down. So once again, guys, do not harass other people. Let's look at her new idea. Oh, okay, that's the wrong one. There we go. All Boogie's back. All Boogie says, Austin DD-wise, greatest mind, but talking to people in high places, you must know where you stand, and intensity can be mistaken for immaturity. I agree. I agree. Alexis Goldstein. My initial thesis about GameStop run-up was that it was less a David versus Goliath story than Goliath versus Goliath. New reporting by Adjourna Fletcher shows at least one Goliath hedge fund, Maverick Capital, made big money off of GME. Oh, baby, this is big. Oh, thank you, Financial Times. Can you not? Thank you. Boom. Oh, this is big. Who made money off of GME? Goliath versus Goliath. Well, thank you. Who was the one that said, look at... Hold on. Alexis Goldstein. Nate P. Nate, did you know that you're going to be part of this show now? Oh. Okay, let me put a little thing here. Guys, get ready for a cool video. Okay. Meatball. So I was just feeding my dog one day and looking through my awesome live stream that I do bell to bell when suddenly Nate P says Alexis Goldstein just tweeted she's read through the DD and thinks it's Goliath versus Goliath. What is going on here, guys? Have a great day on me, no charge. I hope you guys are ready to answer the question of what Alexis Goldstein now thinks is the current run-up. We've talked about long whales before, but we've majorly pushed them to the wayside because we care more about what the DTCC is regulating and the ramifications of the 005 rule already starting to cause a major shakeup. If you guys weren't part of that live stream, I talked about how FTDs do only have 2 to 4 days to cover. So now with the 005, how are they going to be able to continue that cyclicality of FTDs? Well, let's see if Alexis Goldstein can bring back the story about long whales. She says, new reporting by this user shows at least one Goliath, right? She originally didn't think it was about David and Goliath. She thought it was Goliath versus Goliath. Where are the long whales coming in? Hedge fund Maverick Capital made big money off of GME and other value stocks, and we're going to cover that right now. The only thing that you need to do on your side is to make sure that you've strapped in your seatbelt, and then you make sure that you've already pressed that like button for the YouTube algorithm to be fully defeated. It's like a dragon in Dungeons and Dragons. You have to basically claw at it, and then that'll get more apes to watch this video. And make sure that you've hit that subscribe button already with the notifications turned on so you don't miss a single live stream and don't miss out on the squeeze itself. I'm going to be telling you on live stream when it's happening. So here we go. Mavericks bets on unloved stocks pay off in value rally already. Big FUD article, unloved, excuse you. We like the stock, at the very least I do. As a reminder, I like the stock, you don't have to. paper hands. That's why the scissors are in the chat for you. Okay, a clutch of hedge funds, including Maverick Capital, has ridden a surge and beaten down parts of the equity market to post large gains so far in 2021. Despite losing about 9% of its flagship hedge fund in a choppy January, Lee Ainsley, Dallas-based Maverick, which manages $11 billion in assets, gained roughly 25% in February and a further 20% last month, according to figures sent to investors and seen by the Financial Times. We have been so excited to say that this is an underdog story, right? This is us fighting the big guys. But what if we have big guys on our side too, right? Siege giants, right? Tree ants, right? They are just lumbering behind us. Maybe we don't hear them because we are charging ahead full force, but they may be the deciding factor. They understand the hedge fund tricks. They understand what there is at stake. And if they have big money on the line, boy howdy, do we want their help. Let's find out a little bit more about how much money they actually made. The bets on previously unloved value stocks in sectors such as retail, airlines, and banks has left Maverick up about 36% in its flagship fund this year to late March, making it one of the world's top performing hedge funds according to investors. Numbers sent to investors. Maverick declined to comment. They're keeping it quiet. The performance bolstered by a long-standing position in SoftBank-backed e-commerce firm Coupang, which floated last month, and a timely bet on GameStop, whose share price rocketed this year, shows how abruptly hedge funds warmed to an investment style that has long been out of favor. Value stocks have badly lagged behind more expensive stocks with faster earnings growth in sectors such as technology for years, but they have enjoyed a rally in recent months on expectations that progress on coronavirus vaccines and the easing of lockdown restrictions will lift economic growth and improve their earnings. I can't believe their first thing wasn't apes are here and they're willing to pump this stock and believe in the stock despite the ups and downs. That should have been the very first indicator here. That has rewarded funds that held onto their value positions or switched into them more recently. Managers betting value stocks are finally ripe for a rebound were confounded by the onset of the coronavirus pandemic last year, which further battered these sectors. In October, $10 billion in assets AJO Partners announced it would shut, saying that the drought in value, the longest on record, is at the heart of our challenge. Let's take a look. We have value stocks versus growth stocks. If you guys don't know the difference, it's pretty simple. This is just general, like cutting the line in half based on a couple of indicators. If you guys want to see a video about that specifically, drop in the comments below. Let me know, as always, what you guys want to see. So MSCI World Indices, look at those value stocks start to push, and especially between February of 2021 and March of 2021, above those growth stocks. Ainsley, a technology specialist and a Tiger Cub who previously worked at Julian Robertson's Tiger Management, profited last year from contrasting bets on tech stocks such as Netflix, Microsoft, and Facebook. Mr. Bill Huang, also a Tiger Cub, unfortunately a bit of a criminal, as shown by the criminal guilty pleads that he had from the previous financial crisis, was back a couple of weeks ago, causing almost a tiny financial crisis when his hedge fund got margin called. So not all Tiger Cubs grow up to be lions. I think that analogy makes sense. But towards the end of the year, Maverick refocused on the potential for a strong economic rebound, according to a person familiar with its positioning. Following the example of previous market rebounds, such as in 2003 and 2009, when beaten down, economically sensitive stocks recovered quickly. It began buying. Sydney-based Platinum Asset Management, which runs $20 billion, has also tapped into the rally in value stocks. Since the start of November, just before the BioNTech Pfizer vaccine was revealed to be more than 90% effective, the global MSCI World Value Index has risen 29%, outpacing the growth gauge, which is up around 19% over that time. Platinum, co-founded by ex-Bankers Trust managers Kerr Nielsen and Andrew Clifford, has gained around 30% in the flagship global fund since the start of November. Platinum cut positions in stocks such as Facebook, Google, and Tencent last year, and instead bought cyclical stocks such as chipmaker, Samsung Electronics, and Micron Technology. Valuations were such that you knew you would make money, said Clifford, the firm's chief executive, who added that being able to buy some unloved stocks at book value was as obvious as it gets in investing. Also profiting is New York-based Amc Capital. Its credit opportunities fund was hard hit during last March's credit market sell-off, but has gained around 8% this year to March, said a person who had seen the numbers, helped by a rally in some of its asset-backed securities focused on aviation and aircraft as lockdowns ease. However, some managers now question whether recent gains mean the rally in value stocks has run its course, at least for now. Here's the FUD. Okay, so Maverick expects the rally to come to an end and that big tech stocks with stable growth look attractively valued again, said a person familiar with its positioning. And Platinum has trimmed its exposure to names that have performed strongly in recent months, although it has not sold out entirely. The stocks have rallied very hard, said Clifford. We're in a difficult middle ground. Over the next 3 to 5 years, there are returns to be had from value and cyclicals, but in 2021, maybe there's not a lot more to be had. Okay, so we are seeing that there is a hedge fund on our side, but these hedge funds are likely starting to pull back in general for value stocks. This is an important step along the process, though, is to be able to get the view out, and you know that some apes are going to read this, not get to the very bottom, and basically see it as a bullish article, and then get them into the moon platoon. So if you want people to watch this video and be able to say, hey, this video is ultimately bullish and a reason why GME and AMC and other value stocks are likely going to be a Goliath versus Goliath battle, you are going to want to like this video, smash that bell button and that subscribe button so that more apes are finding out about this video. Thank you for those of you who do support the show, either through Patreon by clicking that link down below or pressing that join button next to the subscribe button. I really do appreciate you guys. I'm about to have no more room in this final end screen, and thank you, Nate P, for letting us know. Once again, if you guys want to let me know something on the live stream, I go bell to bell, and you should not miss out on a single live stream. Thank you for joining, and we'll see you in the money. Peace. Sweet. Thank you, Nate. All right, this bounce started to peter out, which is okay because this is one part of a subwave. Let's see if this subwave here, you cannot see, but now you can. This subwave here should be able to start pushing from 176 to 180. That's a $4 subwave. 177 is the current breakout, so we could see it push to 181. AGC, okay. Biggest SPAC ever. Oh, looks like it already responded to the news. Pushed all the way to $16 after hours. So Altimeter's growth stock is trading higher as SoftBank is a deal at $35 billion by as early as next week. Altimeter has procured $850 million for 2 SPACs. Ooh. That big. That's big. Shares in Altimeter, a special purpose acquisition company operated by Altimeter Capital, rose 19% in pre-market trade after the Financial Times said it's in talks to merge with Singapore food delivery and payment service Grab. Grab will raise $2.5 billion with nearly $1.2 billion coming from Altimeter in a deal. Wow. Holy moly. So that's exciting. Okay, let me see what everyone else has written over here. Yeah, remember spoofing and layering and then we just don't talk about that anymore? Jeez. We don't do dates, my friend. I'm trying to see. Okay, AMC, take my energy. I'm trying to see what you guys are saying here. Crazy Canuck says, I'm the one of the guys who bought for the cause after Robinhood F'd y'all. I'm considering that money gone as soon as I place my buy order, and yet I'm up 20%. Crazy Canuck. How crazy are you? Crazy. Oh, man. Can you imagine selling your ticket to the moon for $250? Right. So, let's see. Ticket to the moon, check. So we have 500,000 puts at $580. That's out of the money. GME now hovering underneath that resistance, getting rejected once and hopefully not twice at 180. Nicholas Holmes says, I'm so hungry, need tendies. Okay, FIXX. So if you guys have any other tickers, let me know. FIXX. Homology. Uh-oh. This is homeopathy. Homology? The study of homes? It's first grade, SpongeBob. Homology. You're probably wondering if it's at its lowest. Seems like it. $11. Yeah, it's never been so low. So it's about $20 down. You're trying to catch a falling knife, and you're like, Andrew, should I catch this falling knife? Well, is there any news that tells us why? Ocugen leads health gain homology medicines among major losers. Uh-oh. I mean, do you want to buy a loser? I don't like Seeking Alpha because it doesn't actually do any analysis. It's just like, these are the ones that lost and won. And I'm like, oh, great. Thank you. Well, I don't know enough about why this dip happened to tell you, but if you're looking about risk and reward, this is the lowest this has been for a couple of weeks. Let me see. On the weekly chart, this is the lowest it's been for years. This is the lowest it's been, period. So it might be a good time to buy in if you believe in this stock. Luminar Technologies. Luminar is on a 5% dip today. And the lowest point, it was 1945. At, what is this? The 5th of March. So in terms of risk, that actually doesn't seem like a risky bet. You do have to understand that when we look at previous price points to be able to generate floors for our stock, at the end of the day, it ends up being well, if it does go much lower than the floor that we saw weeks ago, how are we not going to see people snatching up the stock right there? So that's the reason why. I have not yet looked at Sundial, so I can look at Sundial here. And Mohan says stocks recall stocks, in my opinion. Oh, MF Cena says, Andrew Money, you're like my brother. Thoughts on CTRM? Okay, well, you got me there. Okay, so CTRM. I had it trading between two levels of support and resistance. It dipped below that pre-market yesterday, no, on Monday. So now it's trading at a level that really has been unseen for a while. The last time it was here was all the way back when it was actually breaking out from this level back in January. So CTRM, I've been warned as a pump and dump, but let's just see. Oh, right, the $125 million direct offering. This is likely the correct price now, unfortunately for CTRM. That 125 million direct. So when you look at a stock dipping and you're like, uh-oh, is it actually meant to dip? Or is it because people bought the rumor or sold the rumor and now is trying to get back? So this currently had 3 days to try to recover. It only started to perform even worse today. So if you're wondering about entry points, right now it does have to reel from that $125 million direct offering news. So that is something that is not likely going to shake easily. In fact, we see the same bottom, the same level of support for 2 days in a row. And this day, it ran straight through. So I'm going to believe that this level of support is now resistance. Keep tracking it, but I wouldn't try to touch the stock right now. Catching this falling knife, dangerous. That's CTRM. Excuse me. Why are we trading sideways? Why is the borrow rate so low? When will we move? The theory of everything GME. I like how it's like new mind-blowing DD. I'm gonna do a search. Theory of everything GME. Ooh, this is a theory. This is a theory of everything. Very cool. It's posted by C Diggs. So I'm gonna cover this real quick. Actually. Reading through your DD and wondering if you wanted to share some thoughts on the show. Okay, so this is the theory of everything DD. 1, 2, 3, 4, 5, 6. We've been seeing sideways trading. The borrow rate is very low. The volume has seemed dried up. 4, it seems that shorts have not covered. SEC seems to be idling. And 6, we see deep in the money calls in FTD. So DTC and OCC must also see that they're since their systems have been clearing these trades. So this is something that number 6 is. This is posted a day ago. But so number 6 is the problem with these DDs is that the timeliness is everything. And so number 6 is already starting being counteracted by DTC's rule 005. So I'm going to say that before we start reading with a big grain of salt, because you don't know if this person has considered 005 yet. Let's look at the edits first to see if they've actually changed their tone. The staleness of these DDs can be very quick. No, too long didn't read, and no edits. Okay, let's actually look at the top comment. Occam's razor. This is a great DD because it kind of like compiles everything you need to know. People who are like, he doesn't read any of the regular comments, that's a super lie. Don't lie to me, straight to my dog. This comment wasn't a super. In fact, I haven't even read the 2 supers yet. So Amy Lawrence says, can we get scissors in the chat for shill Brett? Okay. Don't know what that means. Maybe I'm missing some context, but go ahead. throw some scissors in the chat. And then RND Kawayama Yamaha PVSP thoughts. Okay, let's take a look at that first. Then we'll go and then we'll start this article. What was Brett saying? Oh, now I'm starting to read some of Brett's comments. Let's not be mean to Brett, guys. Brett, don't be scared. Okay, so let's do this. Whoa, that's wrong. I'm gonna go like that. Okay, Pervasip. Oh, I don't do penny stocks, my friend. There's a reason. It's too volatile. Wow. Yeah. So what I can generally say that this looks like this does not look like a strong impulse, but because of the way that the tapers off on this breakout and then basically rematches it here, almost exactly. However, it does actually seem like this was a resistance now that is turning into support. So at least if you're looking at a risk profile, this is the floor right now. I'm not even gonna say the prices because it's way too ridiculous. There is also a double touch here for resistance. You haven't seen it being supported at this level yet, but that could be where you're gonna see the stock try to trend. The uptrend right now is not easily recognizable. If anything, there's one trend like here. Like there, because it has an ascending level of resistance if you ignore like this part of the graph. So as of right now, any stocks don't act rationally. Hard to see exactly where the stock is going, and always read your fundamentals and read your news catalyst as well. Okay, so back to AMC. AMC, where are you? AMC. Dynamite. Ooh, we're starting a wedge here. This is this is starting to shape up as an ascending level of support, but a double top at this level of resistance. Hopefully this is a bullish sign. But as a reminder, AMC is starting to get ready. Austin Reynolds says, I sent a email to Rachel Maddow pointing to Ro Khanna video and Atoba DD. We need to send her an email as this story screams her name. Gotcha. I'm about to clip it too. Hold on, wait. Leroy says, I love and missed you. Aw, dude. What's the meaning of life? 7 times 6? Let's see. Okay, I do have a couple more ticker symbol suggestions, but instead I'm going to try and cover this as briefly as possible. And then we are likely going to see us come back with Mason and possibly Atobit. Let's see what he said. My caps is on. Okay, so we are at 3,200 concurrent viewers. That's very, very cool. If you guys wouldn't mind just taking your mouse, do it with me, right? Take your mouse, go ahead and that like button. Would appreciate it. Why are we trading sideways? Why is the borrow rate so low when we moon? The theory of everything, GME. OTC, OCC, and SEC are collectively the long whale bending the rules to keep the price stable for now. This is cool. This is a really good DD. So that's why we're going to be covering it in just a second. Like, I'm just wondering if I can hold my bladder long enough for this. I think I can. My 2 cents. So let's see. This is too fantastical. Why would they cooperate? I think that's a really good question first. Yeah, let's just start there. Let's start there. Meatball, stay. There's food in here. Okay. Should I do a costume change? Should I be like, whoosh? Hey. So hey guys, we have had multiple people ask, why would these hedge funds and these short whales let you get away with this? You sneaky kids and your dog too. Well, let me tell you a thing or two about what Maggie Web Design wants us to look at. New mind-blowing DD on super stonks. Why are we trading sideways? Why is the borrow rate so low? When we moon? The theory of everything GME. Hey, if we haven't had a pleasure to meeting yet, my name is Andrew, and here we're going to talk about that exact same DD. You guys will know that we are bringing you the meat and potatoes first, and I want to answer that question. Why would anyone be caught at the other end of this gun, at this squeeze rocket? Essentially, you're pointing the rocket in your face and letting it blow up if you are a short hedge fund or anyone selling these contracts for us to be able to gamma squeeze together. So let's say that we can actually answer this question first. I saw a super, but I'm going to cover it in just a second. Let's go all the way down to the Q&A. This is all too fantastical. Why would they cooperate? Number 1, 2, and 3 reasons why. 1, you are the short hedge fund. You know you're done for. What do you want? Right? Incentives, perspective, everything important that we've covered in the past. The short hedge funds want some legal cover from lawsuits, time to hide your assets, some slim chance to survive. Your leverage is that you can put your hands in the cookie jar right now if you start covering, because you can access OCC member contributions before you're liquidated, but you are going to get yourself sued without any legal cover. That's number 1. Number 2, you are a non-defaulting member. What do you want? A short hedge fund's tendies at a discount, and you don't want short hedge funds to touch your member contributions to shared funds for their mistake. Essentially, an innocent member of the money cartel that we call the DTC, right? If you haven't done anything wrong, but you're still going to be hurt by the new DTC rules that say essentially everybody pays for Uncle Joe's margaritas. Uncle Joe is Melvin and Citadel, and he's been racking up the margarita bill, and soon we're not going Dutch anymore. We're actually going to split the bill down the middle, even if you didn't have a single margarita, a single manipulation of the markets. So right now you are also going to have this incentive. What good is it for non-defaulting DTC and OCC members if GME goes up, but Citadel and GME shorts use your funds to pay for the default? You also don't want the entire market to crash and your portfolio to go into the red. There's double reasons why this innocent member of the DTC cartel doesn't want this to go bad. And then finally, you are the SEC. What do you want? You want this whole event to be over. Okay, so once again, those are the 3 perspectives here. Let us go back and actually give it the time of day. I'm going to skip through a little bit of the mumble jumble and only give you the ape. Too long didn't ape. Too ape, not long enough. We're going to give you guys the short version to make sure that you fully understand. The only thing that I ask in return is a quick like on this video so that more apes can find out and we defeat that YouTube algorithm together, and a subscribe, because we're on our way to 100,000 and we would like you to join us on the way to Tendy Town. It really does help out a lot, and away we go. Over the last few weeks, they have had some anomalies that have been bugging all of us. They've been trading sideways for a while now within a narrow range. Number 2, the borrow rate on such a volatile stock is ridiculously low. Number 3, the volume has seemingly dried up. Number 4, it does not appear that shorts have covered. Number 5, the SEC seems to be sitting idle on their hands. And number 6, we see the deep in the money calls and FTDs, so DTC and OCC must also see this because their systems are clearing these trades. Okay, too long didn't read. We already have it directly in front of us. The answer is actually really simple. There is no single long whale. DTC, OCC, and SEC are collectively the long whale bending the rules to keep the price stable for now. On January 28th, they saw what happened and saw the systemic risk of that GME shorts could pose, so they allowed RH and Citadel to bend the rules. Otherwise, it would have impacted all DTC and OCC members. In response, DTC issues 004 and 801 and 004 and SEC SR-DTC 2021-004, OCC issues SR-OCC 2021-801, and SR-OCC 2021-004, which firewall members from defaulting members and allow orderly liquidation of defaulting members. We've covered these all in the past. Essentially, it's how to kill a hedge fund. They wanted to basically say, here is how we are going to decorate your tombstone if you do lie to us or continue up these risky activities. So here's the answers. Why are we trading sideways? Contrary to popular conjecture that Citadel is using a short ladder to suppress the price, they believe that DTC and OCC members who are not exposed to GME short positions are working together to suppress the price within a narrow, stable range. The reason is not because of max pain. The reason is to wait for the firewalls to be in place. Price volatility can easily cause this to launch before DTC and OCC members are ready. They know that retail is largely tapped out, obvious, by lack of volume, unless sudden volatility draws in more retail buyers that will move the price faster than they can control. So who is suppressing the price? The non-defaulting members of the DTC and OCC collectively to protect their assets from defaulting members. Shorts are buying the deep in the money calls to carry their FTDs. Non-defaulting members are laddering up and down to maintain the price stasis. So essentially, we've already talked about how the cyclical nature of the deep in the money calls are now finally being called into question as they stop doing that from 005. And that is the new regulation that allows us to be able to control this nonstop, ever-ending, infinite short glitch. Why is the borrow rate so low? Right, we've talked about that graph that has a logarithmic y-axis of just how much higher the borrow rate should be compared to how much of the stock is available to borrow. And TCAT is all the way up here on the y-axis, and for GME, it's almost the exact same availability as TCAT, and with less than 1% borrow rate. So DTC and OCC members, as well as large institutional shareholders, are collaborating with the SEC's approval to suppress the borrow rate to keep the current price stasis. The price stasis is important to hold the line until 004 and 801 are in place, which establish liquidation and order of payment. Everyone has agreed to this so they can protect non-defaulting members from the GME short blast. We'll see later why non-members are also incentivized to go along because of the updates to the OCC auction procedures. Okay, so that is borrow rate. That is also trading sideways, and this of course also helps IV, which is building us a gamma ramp very well. We've already covered this in the two sides of the gamma squeeze between Gordon Elite's opinion and Alexis Goldstein's opinion. Why is there no volume? Retail is out of the picture at this point. Retail has already put a lot of their liquid capital into GME, and the price stasis and news cycle has suppressed new retail from jumping in. The MSM is not being manipulated by Citadel or GME shorts. They are being manipulated by all of DTC, OCC, and SEC in order to prevent retail from creating volatility. Why hasn't institutions bought like mad? They are largely part of DTC and OCC, or their trades are cleared by DTC and OCC members so that they have agreed to hold the current price stasis until DTC and OCC can be protected from the GME short fallout by 004 and 801 and OCC 004. Without DTC 2021-004 and 801 in place, Citadel reaches into everyone else's cookie jar to pay for the default. there's another important blocker, the recruitment of non-clearing members as auction bidders. This process is likely already underway right now. BlackRock is not an OCC member, and the second proposed change in 004 would allow non-clearing members to participate in member suspension asset auction, right? There is an auction of basically just tearing them apart, a scramble for a defaulting member of this committee. And now there is going to, non-clearing members can also get in on the action. So now they have also a brand new incentive, which we read down below. Why is the SEC sitting by? They know what's going on. The SRs themselves are DTC and OCC communicating the architecture of the squeeze in broad daylight. DTC and OCC clear every transaction on the market. They are smarter than us, right? We've seen them reveal so many different pieces of the FTD information that we were like, oh, is this not important information? The FTDs that we are seeing cycle through. If they can figure out what's going on with the deep in the money calls, FTDs and other shenanigans, DTC, OCC, and SEC sure as heck know what's going on because they architected it. Okay. We're getting closer to speculation here. This is getting a little bit dangerous to fully put out into the ether, right? So as of right now, I don't want to say that this is something that is like a major shenanigan between these three entities here, and you guys should also take that with a huge grain of salt. How can no one see what GME shorts are doing? They can. In fact, they are probably working on GME shorts to maintain this price stasis with the tacit understanding that they would all be wiped out in a default, but in order to protect the DTC and OCC, they will work together in exchange for perhaps leniency or more likely total lack of punishment and perhaps a legal shield from the Department of Justice in exchange. So when moon, you guys are probably wondering when exactly is the moon. We hate dates on this channel, but let's give some windows instead. So 801 was filed on the 2021 February 23rd, and it's a 60-day window from filing in which it can be put into effect if there are no objections. However, it can be extended another 60 days if the SEC has objections. So currently we have 60 days from the 23rd, so that's 2 months. That's basically April 23rd, and then it can have another 60 days if they have objections. It doesn't seem like they have any complaints yet, so it could be April 23rd or in 2 months after that. And I know I'm buffering the dates because I'm just taking 2 months as the example here. 004 is filed on March 31st. 2021, and it's a 45-day window, and it can also be extended another 90 days. So it's very similar in duration to 801 with just a month off. The idea is that these are calendar days because SEC has a very specific definition for business days and would use that term explicitly. 60 days would be the 24th, okay, very close, and then we would see this start to move between now and then if both 801 and 004 are put into effect. I like that this is a very conservative look into the dates and making them clearly windows instead, right? Because we do have a whole process that, once again, is not just the only indicator for the moon catalysts, but perhaps one of the most important ones. Important edit. SEC has pushed back 801, which is the same as 003. 801 is the advance notice of 003, pushed to May 31st. Who bumped it? Okay, so this is now pushed back. OCC 801 has now been pushed back to May 31st. This is in the link down below, so if you want to know more about that, go ahead and check that out. Won't Citadel and GME shorts keep kicking the can? They won't be able to. Citadel and GME shorts are not suppressing the price. DTC and OCC are collaborating to suppress the price right now. Once they are protected, the borrow rates will go up, margin calls will trigger, and the squeeze is on. Can't DTC and OCC keep doing this forever? The members likely want to resolve this as much as we do. Everyone knows that GME shorts are going to default, so that's why DTC 004, OCC 004, 801 are created. They have already accepted that these defaults as a result of impending scramble to cover, but they are bending the rules at the moment to set up their firewalls. Okay, so you can take a look at this yourselves. What can Citadel and GME shorts do? They can delay 801 by an additional 60 days and 004 by additional 90 days. Why would they do this? To secure their own assets. They would offer the Citadel hiring of Heath Tabbert as the vehicle by which they would do this delay. His job to get the SEC to delay enactment or negotiate the wind down as favorably as possible for Citadel shareholders and leadership. And we will be the first to update you if that starts happening right here on this channel. Why doesn't the SEC just make 801 and 004 effective? This is a really great question. They are self-regulatory organizations, both of them. So read these images above carefully. DTC and OCC make up their own rules, approve it on their own schedule. The organizations themselves will make 801 and 004 effective when they are ready. It does not have to be 45 days or 60 days. They can enact it at any time within that period as long as SEC does not object. Why aren't they not effective yet? They think that it's still closed-door negotiations between the members themselves. The short hedge funds have no more negotiating power after this starts, so they need to get everything sorted now. The non-defaulting members are working to recruit and qualify non-clearing members to bid on the assets during the liquidation. So, does this change the strategy for apes? And with the caveat, this is not financial advice. No, buy and hold shares. What you can take away from this is that you're not see significant price movement up or down for the foreseeable future. And until they are in place, you're literally fighting against all of the Wall Street, even the GME long institutions. There is literally no point in buying deep out of the money options until there is a whiff of 004 and 801 getting close to implementation. This is something that we've been covering for a couple of weeks now. We need to get 801 directly in place, and then we'll be able to see some real catalysts starting to move up. Until then, try not to focus on the dates and try not to focus on the price of the stock trading sideways and just having pitiful volume overall. FAQ. I already went through one of the more important pieces of the FAQ, but perhaps you guys are curious about 10, 1, 100K a share. It is not out of the realm of possibility that some shares will exchange at astronomical prices, but it is going to be a mathematical outlier. There's a non-zero chance, but a very, very small one. By human nature, many people are going to be selling before it hits that level. Remember, the greatest prisoner's dilemma that we've ever faced. Reddit is not the universe of GME holders. This group is the most diamond-handed of the apes around, but there are a lot of people who bought into GME who are not here on Reddit. Exactly. This is the point, right? It sounds like everyone's going to be holding until 10 million because this is the sounding chamber of Reddit. You're not likely going to be able to completely expect what people are going to be able to do. What about the dip yesterday morning? Coordinated to counter the good news on Q1 preliminary results. Ended up in our zone. This is from Monday morning. What about that dip to $120 ahead of Q4 earnings? You see a pattern. Why $180 to $200? I don't think this is a fixed position. It can move. Okay. Why doesn't GME just do X? I think SEC and BR are working with GME board to keep this orderly. Everyone is treading lightly right now to prevent this from breaking away to an uncontrollable squeeze. Honestly, there is a ton of excellent Q&A in here, and I am tempted to be able to just like cover this all and especially give my opinion on them. But for now, I want to say thank you guys for reaching the end of this video. Thank you Maggie Web Design for pointing this out and voicing what you want to see on these live streams. It's entirely up to you what you guys get to cover and the kind of technical analysis that we do on this show. So make sure that you tune in every single weekday. We do go buzzer to buzzer, bell to bell, and I would love to see you here and ask me a question about what you think we should cover next. For now, but not for forever, I want you guys to take a look at these really cool people, and I will see you all in the money. Peace. Cameron Cram from like 10 minutes ago says, the CEO of the company I'm working at. Oh gosh, Cameron. No, Cameron. I moved my mouse a tiny bit, and then I lost your super. Cameron, can you, if you're still here, can you please just type it out in the text again? Or mods, if you see it. Let's see. Richie Ramos, I can't see your super, but thank you. I appreciate it. Rachel is the catalyst. Okay, so... Cameron says my super chat was referencing AMC. Could you just retype it out? Control F does work, but the chat has already updated. So even if I scroll to the very top, I can't see it anymore. Let's see. So it's a good time to start winding down and getting prepared for the Power Hour, where Mason is going to come on and tell us a little bit more about how to talk to a congressman, since he's worked directly with that congressman in particular in question. Let's see. Just gonna make sure. All I'm doing is just reading through your chat right now. It's just trying to make sure that we actually get a couple of looks here. Cameron says, the argument the CEO of the company I work for told me the stock will not squeeze because of at least 30% of the outstanding shares is traded on average daily for AMC. Okay. Appreciate the update. Garrett Collins, any idea why the institutions wouldn't sell off to save the market from crashing due to GME squeeze? Why would the institutions care? If you're talking about like, why does Melvin care? If they cover this short, they are going to be down so much money they might not even be able to. I asked Austin this yesterday, right? First of all, they might not be able to. They're just playing around with borrowed money right now, and borrowed money from nobody because it's naked. And the second thing is that even if they did, that would be a big L for them. And if they take that L now, while they still can, it's still going to tank the market. The process of covering your shorts, it first starts with getting enough money. And there's nobody with that much money, so they have to sell their stocks, and that's going to tank the market already. So it's not a question of why don't they just do this to save the market. It's more like, oh yeah, if they would have, they could have. If they could have, they would have already. Okay. Love the show, says Henry Wiener. Oh, I appreciate that. James Allison. What is James Allison saying? One sec. Does the US dollar gain value with how high UUP or UDN is? Could you explain what the stock is connected to the US dollar value? UUP? This doesn't seem like... This is interesting. I bet you can track this with GUSD as well. It's a blockchain that actually, or stablecoin, any kind of USD stablecoin, it also tracks the relative price of the US dollar. I think that the value of the US dollar has more, like, more indicators and catalysts than one of these stocks. I'm not sure about the nature of them though. These questions are all about US dollars ETFs. I'm imagining that this is an ETF that is specifically to track the movements of the US dollar in relation to other values, currency values. Meatball looks so cute. I agree. Look at him. He's just sleeping. Having a little sleep in his dreams. Illegal Monkey says, is there a chance that hedge funds just never cover and SEC and friends just forget and move on if there's never a squeeze? It costs them interest to not cover. So the question is not will they never cover. It's that if they don't cover, it costs them money to not do that. So they are trying to bring the price of the stock down to a level that they can cover comfortably at because they need to cover. So that's the current misconception. Some people are asking, like, do hedge funds like ever need to cover? And yes, all shorts must cover. This is just the, it's kind of like your student loans. You can keep pushing them off. You can refinance them. You can do whatever you want. However, you must pay them off eventually. It's a debt. Hold on, guys. I'm just gonna screw in this pop filter real quick. Pop filter time. You guys heard a lot of put sounds. Now suddenly it should be better. Kyle Schumacher says, was wondering what your thoughts were about the possibility and the squeeze triggering after hours. It's possible, but I wouldn't call it the mother of all short squeezes. I would say that gamma squeezes have trended after hours previously, as well as like other catalysts that have triggered like massive buying. So I would say that the amount of people and volume necessary for the squeeze to actually happen will entirely be by the institutions whenever they get margin called. So they can have the ability to be able to buy and sell after hours and pre-market. So make sure that you do have, at the very least, downloaded this app, right? Go down to the description and download the WeBull app, because as of right now, if you don't have the ability to trade after hours and pre-market, you might have some trouble. Didn't realize I'm blocking Meatball now. This is why I can never win. All right, I'm gonna attach this later. Cameron Cram says, my bad, bro. Forgot to add the question about how you would respond to my CEO. How would I respond to someone who says that AMC is blah, blah, blah? Why do you need to change his opinion if you have done the DD yourself, is the question, right? I would say that AMC's short interest speaks for itself, right? AMC's value proposition speaks for itself. Yeah, we're also going to be able to look at the Finra report later today, because it should be updating today. Kyle Schumacher says, got WeBull when I first started watching you. Aw. Anyone else writing SOS today? Oh, man. Coach Sam says, hey, Andrew, I'm deep in AMC. June $40 calls. Do you think there's any hope for this call? For June, so one of the things that we're looking at is the timeline. So, okay, first of all, I don't want to tell you, because the risk to reward of this kind of call is borderline like financial advice. So I'm just going to say that the DTCC ruling is going to be affecting both AMC and GME, right? And we just talked about the windows of the timeline of when we are expecting that, if there were no delays. We don't know if there are going to be delays. So that's the question. That's the question you should be asking yourself. Yeah. Josh L. The longer this plays, the deeper the grave hedgies dig themselves. Right now, it might actually already be hedgie length deep, which is the issue, right? They're digging themselves a grave that is going to be so big that it's going to be a tomb. It's going to be a pyramid. It's an inverse pyramid in the ground, because they know that they're already done. Let's take a look at SOS one more time. Nope, that's wrong. I hate you, WeBull. 31% up. Ah, we did that bounce. So that entry point right here, hopefully some of you guys got in there. Put this line right there for you guys to be able to jump on into SOS. As it ran out, it doesn't look like it is going. It actually might still be on that impulse wave. Let's look at the 5-minute chart. Yeah, this looks a lot like a continuation of an impulse wave. That's the tricky part. This is either continuation of this impulse wave here or the beginning of a corrective wave. So watch the MACD because this could easily trend back down to this level and it will be supported again at 520, or it's going to continue to rip. It's my money and I need it now. SOS has actually been in the limelight for having, I think, copied up some stuff, got into some copyright strikes or something like that. Their grave is like the hedge fund Grand Canyon. Yes, that's good. Let me check how my volume is right now. Or it's going to continue to rip. It's my money and I need it now. SOS app, right? Go down to the description and download the WeBull app. Strikes or something like that. I would like the volume background noise to cut out, so I'm gonna add a filter real quick. Bear with me. Annoying. Okay, never mind. Chris S says, Andrew, my man, what's up? What's going on? What's going on? Okay, here's what I'm gonna do. I'm gonna take an hour-and-a-half break. I'm gonna actually eat some food. I'm gonna come back a half hour before power hour begins. All right. The goal, the trick is that all of you need to be back here in 90 minutes, right? Because we need to get that video up to 2,000 likes because we couldn't get it to this one, and we're gonna be covering the aforementioned bounce as GME starts to track up with one of the most beautiful impulse waves that I've seen in a while. AMC and GME are both gearing up for something big, and you do not want to miss out. Also, we have other stocks to track. In fact, SOS right now at that 30% up, and other stocks that have been making some mad rips. We don't want to miss out on those. So once again, thank you for those of you who support the show. Those of you who send super chats who don't get to end up on this end screen. I do appreciate you guys as well for supporting the show. This is what I do day to day, bell to bell. So I really do appreciate you guys. Thank you guys so much for smashing that subscribe button on our way to 100,000 subscribers. At 100,000 subs, I'm 100% going to buy more AMC and GME. I'm just not sure exactly how much it is like appropriate. But at 85,000, right, 10,000 away from where we are right now, at 85,000, I'm buying another $1,000 of AMC and GME. So make sure that you know that as we go up in subs, we are going to be supporting the movement even more and more. And for now, but not for forever, I appreciate you guys, and we'll see you in about 90 minutes in the money. Peace.